Welcome to your introduction to internal auditing. Hi, I'm Alice and I'll be hosting your course.
Diane here. I'm your quizmaster and I'll be throwing in the occasional question here and there just to keep you on your toes.
I'm Ricardo and my job is to give you loads of short presentations covering the various topics that underpin your course.
And my name's Kenneth. I'll have a go at slowing things down a bit so we're able to reflect on a few thought-provoking issues before you go on to the next part of your course.
That's the introductions over. Your course aim is to get you to understand the basics of internal auditing. That is, the audit concept, the underpinning procedures that should drive the audit team. And finally, we aim to help you conduct auditing work so you can contribute to the delivery of professional auditing services. We won't try to reproduce the tons of authoritative material that's freely available online. And we won't include endless references to the excellent global standards and guidance published by the Institute of Internal Auditors, which you'll definitely want to study. We simply take you through a number of specially designed models that have a go at covering the basics of internal auditing. We'll be working through several topics that we feel are important for the new internal auditor. Hopefully, they'll come together to form a rounded picture of what you need to know as you start your career, that you can build on as you gain valuable work experience and undertake more formal professional training. The idea is to put all parts of our jigsaw of relevant topics together to form a simple introductory baseline. Your individual topics are bundled together into four main parts. Part 1. Audit concepts that cover the role and principles of internal auditing. Part 2. Auditing procedures have a look at the sort of things that help define the shape and approach of the audit team. Part 3. Audit services, where we run through some of the assurance and advisory services that together make up a professional audit offering, including a detailed case study that you'll need to work through. Part 4 is your resource pack of random topics, which you're welcome to explore if you like, along with a fun exercise based on a specially prepared crossword. Right then, as you start your new career, you have to know what you've got into, which is about some basic audit concepts, including your role and responsibilities, and understanding the reason audit exists and why it's so important in this fast-moving world. Whatever your organization and wherever you work, there must be a context that sets out what you stand for and what you aim to contribute to your workplace. Part 1 presentations cover defining internal audit, the history of internal auditing, the scope of audit work, the audit charter, audit independence, governance, risk and controls, risk management and internal controls, some common audit misconceptions, the audit equation, and finally, the entire audit process in outline. Over to you, Diane.
Right you are. Let me ask you a quick question. How would you best describe your role as an internal auditor? A. The guardian of sound procedures. B. A professional review and advisory service. Or C. A force to ensure good compliance with procedures. We're going for B, a professional outfit that delivers a reliable review and advisory service across the organization. You don't have to take my word for it, as all will be revealed in Ricardo's first presentation.
Thanks, Diane. I'll kick off my presentations with a look at the way internal audit is defined. Let's whiz through the formal definition and scope of internal auditing that was developed by the Institute of Internal Auditors. It tells you what internal auditing's all about, and we'll touch on each part. This is what we're called, and this term appears in many regulations and publications. It may sound a little old-fashioned to some, but it represents our role. In practice, audit teams may be known by a variety of different names, but in the end, it all comes down to being a professional internal auditor. Being independent and objective makes us unique in being able to do a great job. It's about standing back and being able to carry out reliable, well-respected audit work that's taken seriously by everyone, which is the cornerstone of your role. We're both an assurance and advisory activity, which means we have to balance two crucial roles. Audit give assurances that all's well, or will report otherwise. But we also act as consultants by helping management improve things where possible. The late Professor Gerald Vinton used to talk about Janus, the two-headed mythological Roman god, which he argued could easily apply to the audit role. Someone who looks to the past by pointing out findings from an audit, while also looking towards the future by offering help and advice. Adding value and improving an organisation's operations should drive what we do, which is mainly about comparing what should be happening with what's actually happening to help clients improve things, by telling them where they're doing well in terms of staying in control, and more importantly, where this isn't the case. Before we leave this bit, let's talk about this idea of operations, which is a wide-ranging concept that covers everything that makes a business successful, including business transformation, processes, projects, artificial intelligence, resources, finances, team cultures, and much more, which may be better described as operations and activities. Which is why internal auditing starts and finishes with helping an organisation accomplish its objectives. This factor should drive everything we do. Auditors work for and on behalf of the organisation, and if you're not entirely sold on the mission of your employer, then you may well be in the wrong job. A systematic, disciplined approach is about professionalism, much of which involves understanding and working to professional standards. Auditing isn't about looking into things, it's about applying a structured approach in a way that underpins a professional and well-regarded service. Evaluate and improve are key parts of the definition that depend on gathering relevant and reliable evidence about the issues being reviewed. The words evaluate and improve underpin the way audit work is carried out in line with professional auditing standards. We've put effectiveness in a separate box. It's about considering whether what's supposed to be happening is actually happening in practice, and whether it's delivering the right result. We spend a great deal of time building this simple equation into our work, whether the people, systems, and processes in place combine to achieve the stated aims. Risk management, control, and governance processes provide the overarching reach of internal auditing. These three things help define the audit role, which is quite a challenging proposition. Audit is one of the few professions that has these important issues built firmly into its formal definition. That's the formal definition of your role. This is what you are, and this is what you do. You'll want to embrace each of these elements as you get involved in the rich tapestry of professional internal audit work.
That's your formal definition from Ricardo. It's something that you should know by heart. It's who you are and what you do. Remember this as you get involved in the rich tapestry of professional internal audit work. Whatever your team's called, you are first and foremost an internal auditor. It doesn't matter if this sounds rather old-fashioned, it's something you should be proud of. I mentioned the term old-fashioned on purpose, as there's a view that this conjures up a distinct image of the typical internal auditor. Let's explore this idea through a little story. You meet up with an old friend and tell him you've started a new job as an internal auditor. He smiles and says, "Wow, you're going to be part of the scariest team in the organisation. Good luck with that." Why do you think he said that?
The answer lies in Ricardo's next presentation that covers a brief history of internal auditing. But before we do that, let me put something to you. Auditors check and examine what people do at work to make sure everything is being done properly. Do you think this statement is true, false, or is it something that's open to debate? In one sense, this is correct, as we do a great deal of testing which can involve checking and examining. But on the other hand, it's really debatable. Audit is so much more than this. Team leaders and managers should ensure their people are doing the right thing. The modern auditor is now expected to operate at a much higher level, which Ricardo will explain.
Absolutely. It's about understanding where you came from and how things have developed over many decades. To fully understand the role of internal auditing, we need to have a quick look at its history. The story lies in the old-school audit role as a basic checking activity. The Institute of Internal Auditors was established way back in 1941, and auditing has moved on in leaps and bounds since then. Audit comes from the Latin word auder, meaning to listen and to check whether what's being accounted for is correct. In the mid-1850s, corporations were allowed to assume limited liability, where the shareholders avoided personal liability for any debts of the companies they invested in. Directors prepared accounts for their shareholders, which were checked by external auditors. A few years later, the Comptroller and Auditor General was set up to audit government accounts and report back to Parliament. Meanwhile, companies would be encouraged to do some of their own internal checking to support the outside auditors. Finance staff would double-check accounting records in head office and remote sites. Often a dedicated small team or just one person from accounts searched for errors and inconsistencies using the infamous green audit stamp to indicate that a financial record was okay. This evolved into small teams of in-house auditors, armed with detailed audit programs of checks applied on a rolling basis. They would arrive unannounced at an office or site and scan for errors in a selected sample of records that were presented to the section manager. They were pretty much seen as the enemy, spying on hard-working people and disrupting their work. A major breakthrough came in at least 3 different ways. First, a move away from checking the basic accounting records to include operational parts of the business such as production, warehousing and distribution. Then came the use of risk-based auditing, which meant auditing key aspects of the business using a rating system that isolated more important activities and operations that featured in corporate risk assessments. The next factor was the growth of a more formalised approach to consulting work as a key part of audit services, which encouraged auditors to help managers get to grips with new and emerging risks to their business. Which meant getting the attention of the main board and senior executives, looking for dynamic assurances and professional advice. All things that matter to the future success of the business would drive the way auditors work and what they looked at, feeding into the way the organisation manages risk, ensures good governance and installs sound controls. Boards embraced the governance agenda by establishing highly specialist audit and other committees that depended on reports from their internal auditors. Audit has moved far beyond its detailed checking role, with a focus on helping the board improve the way business is being managed in a way that's sustainable with a focus on corporate integrity. By providing assurances to the board where all is well, while flagging up areas in need of improvement, and also providing consulting services to managers. Which is quite a leap from the old-style checkers. We now have powerful chief audit executives who help the board and their audit committees navigate an uncertain future, which means internal audit's value to an organisation can be tremendous. And right now, the sky's the limit. There you have it, a potted history of internal auditing. As a new look auditor, you'll always want to be helpful, understanding, and a good communicator. But you'll need to arrive at a firm opinion on what's good or not so good, based on your findings, and you should never subordinate your judgment on audit matters to others.
There you have it, your potted history of internal auditing, resulting in the new look auditor. The next time you get strange looks when you arrive at an audit venue, you now know why. You're a new look auditor, although this may well have escaped your client. This doesn't mean you're a pushover. Far from it, you won't be moved from a direction that you're sure is right. Now, we've cleared that up. Let me ask you something. When you start a new audit engagement, what sort of things will you be looking out for?
To help you with this question, let's spend a few minutes on another challenge. We know that audit covers many things relating to the governance, risk, and control processes, but we can structure this concept by focusing on the degree to which errors are being made, the way managers relate to their staff, or C, a set criteria relating to the aims of good governance, risk, and controls. We would choose C as the most appropriate response, as there are many things you'll want to consider when starting a new audit, and one handy criteria is touched on in your next presentation.
We'll have a go at examining some of the things good governance seeks to achieve, which sets the scope of audit work. Audit is focused on the risk management, control, and governance processes. Let's go through some of the things that these governance arrangements should aim to achieve, which helps describe what you'll be most concerned about when reviewing risks to the way your organisation works. Let's start with the way audit is very concerned about the way information is being used. In the past, the focus was on the financial information that fed into the published accounts. Nowadays, cybersecurity and the way big data is harvested, secured and employed is crucial to the success of most organisations, and the way these risks are being minimised by management will be uppermost in your mind in many of your audit projects. This next element is about achieving value for money, since inefficiencies and poor business practices can undermine or even crash an entire business. Effectiveness is about what the organisation is trying to achieve. All audit effort will start with business aims and how we can add value to the way the organisation works to deliver the required outcomes, which is mainly about managing risk in the best way possible. Fraud, irregularity, and avoidable losses are all risks that auditors will want to watch out for, as they affect the way assets are safeguarded. The idea is to quickly react and report problems that threaten corporate resources and the reputation of the organisation. You may need to consider fraud risks when looking at sensitive parts of the business where financial resources, valuable assets, or personal data could be at risk. Lastly, compliance is a fixed part of the auditor's agenda. Not as the main issue, but another important consideration that may undermine the integrity of the risk management and control procedures. If controls aren't being properly observed, management may incorrectly think that everything's working well. Poor compliance can arise from the culture in place, driven by the way more senior people behave. Internal audit work can get quite complicated. Our 4 factors can help you focus your priorities. Good governance aims to ensure these objectives are achieved with integrity and in a sustainable manner. And reviewing governance arrangements means looking at whether this is happening or not.
We've covered your role, its scope, and the way this has developed over the decades. But does this mean we can now crack on and start delivering solid audit services?
Not really. First, we need to think about enshrining our role within the organization. You choose how best this can be done. Get the board to agree to our role and responsibilities. Just publish a statement on the corporate website, or tell people whenever you meet them during your work. They're all good answers, but the best one is A. Get a suitable document approved by the board, which brings us nicely to your next presentation. But before I launch into it, let me ask a quick question. You work for the board of directors. Is this true or false? It's true. You should achieve your authority through a reporting line to the CEO or, if not, a senior board member. Although most of your activity reports may well be read by the audit committee, who in turn report to the board, which is why your board will need to approve an audit charter.
Which is what I'm going to deal with next. The audit charter draws together the role, position, reporting lines and services provided by the internal audit function. It should cover things such as authority and accountability, roles and responsibilities, scope of work and planning arrangements, relationship with the board and audit committee, standards of audit practice, independence and objectivity, reporting arrangements, professional standards, staffing and code of ethics, resourcing and co-sourcing arrangements, quality assurance and monitoring the service. The Charter describes the agreed relationship between the organisation and internal audit and helps define the range of audit services that have been endorsed by the main board. We can argue that the primary audit role is to carry out risk-based reviews that consider our 5 key scope areas on the left of your model, which is about clear aims, ensuring sound information, securing value for money, protecting assets, and achieving good compliance across the organisation. The Charter may also be used to defend audit services in the event of a dispute or an awkward audit where the audit coverage is an issue. The scope of audit work represents what should be promoted by good corporate governance arrangements. Risks can be seen as anything that interferes with these aspirations, while sound controls may be seen as all those arrangements that help in achieving these 5 things. The idea is to provide the range of audit assurance and advisory services that fit in with its role and scope of work, and which make for the best use of resources. Audit assurance services will feed into the board's focus on good governance in conjunction with the corporate assurance map. Assurance work has 3 main parties, as the auditor reviews different parts of the organisation and how they deal with significant risks. That is the responsible manager, the internal auditor, and the board, normally via their audit committee. While advisory work has 2 parties, the auditor and the responsible client manager who commission the work. Various advisory services may well aim at supporting and promoting the way risk management is being employed in the organisation, which is why the auditor may be asked to undertake a range of ad hoc engagements where this fits the overall audit mission, and ideally sits with the 5 scope items we've already noted on the left. Although if there's anything controversial that arises from a consulting project, the chief auditor should use this information to inform audit assurance work. Let's touch on some of the audit advisory services that may be mentioned in the Charter. Managers often call the audit office if they want advice and information on a specific topic, say about changing an operational procedure, along with ad hoc tasks, for example, improving fraud awareness in their section. There may well be an open door for this sort of help. Requests for assistance for additional tasks can also arrive at the audit office, where high-level issues need to be addressed by a professional and objective in-house team. Much depends on the way audit formulates its audit charter, which will describe the services on offer. Remember, the board and audit committee can ask audit to undertake special and often urgent assignments. Special projects may be referred to internal audit where management needs some help. One excellent use of audit resources is where auditors help management set up an important project that has to be properly risk assessed. In this way, audit is on the scene before controls are installed and don't just review these controls after they've been designed and implemented. Audit can also get involved in larger projects under its consulting arm, where there's a need to undertake a review on how a high-level change program should be implemented across the business. Many of these projects involve looking for the best way to use scarce resources or target sensitive issues relating to things like the risk culture in different parts of the organisation. Facilitation is another important service, where auditors are asked to help management improve the way their teams get to grips with risks in their part of the business. We know that internal audit is about reviewing controls, but there's a lot more audit can do to support the way business controls are performing. This may well include projects that promote sound controls, such as training managers and staff to deal with risks and develop ongoing self-monitoring and compliance processes. This is about auditors helping managers and their teams understand and embed risk management into the way they work and the way they refine their controls. Investigations and specialist fraud work is often included in the Charter, since audit teams tend to have the right skills and tools for this type of work. Formal investigations can be very time-consuming and are often performed by auditors, where the problem fits with the scope of audit work, which we've already mentioned. Some audit teams carry out formal fraud investigations, if this is in their charter, and there's no separate fraud team. Another way of classifying audit services is to define 3 categories of work, that is, audit assurance work, advisory services, and internal investigations. At the bottom of our model, we suggest that the Charter is set against the backdrop of corporate governance. By suggesting that governance processes, risk management, and controls underpin the wide reach of the audit role, the idea is to promote good governance by effective risk management using, where appropriate, sound controls. In practice, internal auditing may be performed in many different ways depending on the organisation in question, which is why audit work can have loads of different descriptions. The wide range of audit services enriches the way audit deliver value to their organization. And there's so much to learn about the different approaches to assurance reviews, investigations, and consulting projects. Auditors can review anything and everything so long as it's important to the business. It's important to have a formal charter along with a clear agenda, as a guide when deciding how audit can be best positioned in an organization to have the most valuable impact.
Each of the elements of the audit concept are starting to come together. Our role, our scope and authority to work across the entire organisation. These are important concepts. We've still got a bit more work to do to explore some of the things set out in a typical audit charter. One thing we need to talk about is independence, which is found in all definitions of the audit role.
Which is what I'll be doing. Allow me to pose a question. Internal audit is located within an organization. Even if the delivery may be outsourced, this means we cannot be truly independent. Do you think that's true or false? We argue that it's debatable. I'll leave this idea hanging for a bit as Ricardo will have a go at tackling this question in your next presentation.
We'll give it a go. You're right to say that there's a lot riding on this idea of audit independence. Internal auditors must be independent for their work to be of any use. Let's explore this important concept. Independence is about being free to carry out your responsibilities and issue impactful reports without fear or favour. Not many teams can say they have no vested interest in the outcome of their reports. We've split our model into two main groups: the status of the internal audit function and the personal objectivity of each and every auditor. If you do great work and are fair, balanced, and also impartial, then this is a good start. But audit needs to have the right status for their results to make a difference. Which is why there should be a dual reporting line in place, one to the board, with a line to a senior executive or CEO, and the other to the non-executives who sit on the audit committee, which reports to the board. The idea is that audit is not independent from the organisation, but independent from the area being reviewed, being able to work without any constraints. Next, you'll need unrestricted access to everything that helps you do your job. The board will have signed off an internal audit charter that gives you clear responsibilities and authority. There aren't many teams who have unrestricted access to all parts of the business. The senior managers and the board when planning and reporting audit work and conveying any concerns. Personal objectivity relates to you and your behaviour, which is governed by your code of ethics. We mentioned having no fear nor favour, which means you can't accept anything that may impair or presume to impair your professional duty to report your findings. You must also ensure the confidentiality of any sensitive material that you come across. You need to be free from anything that encourages you to skip difficult issues or water down your report, using intimidation, friendships, or even incentives. Although, in the real world, audit can be given additional services relating to, for example, fraud, compliance, and risk management, which means you cannot provide objective assurances on these areas. But there are still many threats out there, like being too close to the staff in the team you're reviewing, and being offered daily perks, or where there's too much compromise because of constraints on scope, funding, timing, resources, relationships, or anything else. Rewarding auditors for finding errors may also lead to a single point focus, which may undermine a professional, independent audit function. The solution is to install adequate safeguards. Auditors shouldn't be involved in audits for areas in which they worked in the previous year. Explain any social relationships to your audit manager when assigned to a new engagement, and tell your audit manager about any specific concerns you may have. Nothing should interfere with performing sound, reliable audits using a reasonable degree of professional skepticism. And it's your job to ensure this doesn't happen, or report otherwise. Be helpful and friendly during an audit, but you should not be moved from a path that you need to continue on, regardless how awkward, unless you are given reliable evidence that persuades you to alter your course. Which means you need to hold an honest belief in your work product, and as you embark on your career, you can't expect everything to go smoothly all the time. There is no point being an auditor if you're afraid to confront uncomfortable issues.
There you have it. Independence is about being able to do a good job and be heard at the highest levels. To operate without fear or favour. Nothing's perfect, as your work will always reflect the realities of operating in a busy organisation. The key is, you need to be sufficiently independent to do a good job that makes a difference. Just make sure you take action if you ever feel your position is being undermined or your work is not being taken seriously enough. We've been working our way through each of the elements in our formal definition of internal auditing, the last part of which relates to reviewing governance, risk and control processes, which is what we now need to touch on.
Which means we now need to have a quick look at the governance concept. Good corporate governance underpins the internal audit role. Unfortunately, a simple internet search will uncover an endless stream of corporate scandals resulting from poor governance. We start with the agency theory, where the people who own or who have a major stake in an entity rely on their representatives to achieve their goals. Shareholders appoint the directors and their external auditors to ensure governance structures are in place and corporate goals are achieved. While stakeholders is a wider concept that includes groups impacted by the organisation. Disclosures comes next. Where a company sells its shares on a stock market, its board will publish reports on their performance and governance arrangements, along with social and environmental issues, and other matters defined by various regulatory agencies. The published annual report will contain the final accounts and information used by stakeholders, while public bodies and not-for-profits will have similar requirements. The published financial statements are audited by an outside firm of accountants. They will issue a clean report when accounting policies are properly applied and the financial accounts provide a true and fair view of the business results and balance sheet. While the Audit Committee reports to the board on governance issues such as accounting, auditing, risk management, compliance issues, employee conduct, and financial reporting practices. Your chief auditor will normally support the board via this forum. It may request investigations into any relevant issues, as may other parties such as risk, nominations, remunerations, ethics, compliance sustainability, cybersecurity, and information governance forums. Now for the board of directors, which will formulate a corporate strategy to achieve set objectives and meet market expectations. This forum of executive and non-executive directors will be led by the CEO and overseen by an experienced chair. The board will set targets for their executive management team, authorise a budget, and in turn, employ managers and staff to implement their strategy, and report back to their shareholders. The business model drives the way the organisation operates. Governance arrangements are more than just complying with regulations. A well-governed business must have a management team that's focused and agile enough to survive and prosper by driving transformational strategies and sustainable policies that bring the business together. Governance risks are noted here. In the end, if the risks that impact a business aren't addressed, there'll be a risk to good governance. The board oversees the business and needs to have a handle on what's happening. Which is why there needs to be a suitable risk management process in place to deal with the ever-changing risk landscape, based around suitable strategies underpinned by sound controls. Which brings us to internal controls. To be in control, the board must have an effective risk management process in place. Much of this will be based on installing suitable controls that ensure people do the right things and avoid making poor decisions. Good governance is mainly about having a good corporate culture in place, where people play a fair game and seek to meet all reasonable expectations. On a wider front, no amount of governance codes or ethical value statements will help if people at the top don't set a good example. Now for internal auditing. The board will rely on its performance system and reports to ensure good governance and successful business results, while internal audit will review the governance and risk management process and disclose whether it's working well, bearing in mind the huge amount of risks that are out there. As an auditor, you may want to ask several questions, including: do published disclosures fit the findings from audits you have recently carried out? Does the board engage in an effective dialogue with its main stakeholders? Does the board properly evaluate its performance and use of their various committees, including the audit committee? Does the business model promote dynamic transformational change along with sensible risk-taking? Does the risk management process fit well with the way decisions are risk assessed by management, business teams, agents and partners? Are automated controls dynamic in dealing with current and emerging risks? Does the performance system promote good governance, sensible risk-taking, and ethical behaviour? Does the culture in place in the various business units lead to the right practices and decisions? Which means your job is to understand and review the unique governance measures in place at your organisation, and whether they lead to a business that's robust, sustainable and trusted by those who have a stake in it.
You're a crucial part of the way your organisation is governed, and you have a crucial role in improving things, which means you'll have to become a bit of an expert in this topic. We're making good progress. Audit Concepts set a firm platform for the way your work can be organised, planned and delivered. We now need to dig a bit deeper into the governance, risk and control agenda by focusing on the risk and control aspect.
Right, Alice. My next presentation is a jumble of quite a few different models, so please bear with me. Let's go through a few simple models that have a go at illustrating the basics of risk management and internal controls. Starting with the risk cycle, which is a well-known way of tackling risk that suggests an organisation should set the context around its aims and objectives, then try to identify all known risks that could, in some way, affect these goals. The next step is to assess the potential impact of the risk and the likelihood of it occurring. The idea is to manage those higher scoring key risks and disclose the approach to stakeholders. The risk management strategy should include the entire organisation's adopted approach, along with its policies, systems, projects and procedures that help the business navigate rapid change and uncertainty, which should be reviewed regularly. We've also put risk culture in the middle of the cycle, as this is about ensuring everyone understands how the business model needs to keep pace with changes in the virtual and physical marketplace. Much depends on the risk appetite in place, which we'll look at next. The idea is to get to results for key stakeholders by considering how cautious or how aggressive management should be in getting from aims to results. This context sets the inherent risks that we've measured as ranging from 1 to 5. The idea is to get these risks down to an acceptable level of residual risk, low on the left, high on the right. Fierce managers with a high risk appetite may want to stretch the business, but they will have to install enough controls to ensure it doesn't crash and burn. Investors may want high-risk strategies to grasp new opportunities, say level 5 but tempered by suitable controls so residual risk sits at a more acceptable level, without slowing down the business too much, which means swiveling our controls triangle to target high-risk areas, since not enough risk-taking is just as bad as taking too many risks. Strong controls may reduce inherent risk from level 5 to, say, level 3, as the agreed risk tolerance. If controls are being bypassed or used incorrectly, the actual position may be closer to 4 or 5 rather than 3. Although more controls may mean a slower response to rapid changes in the marketplace, public and non-profit sectors embrace risks to help them meet their targets, while the private sector takes risks to survive. Our risk appetite model falls down if there's no real understanding of inherent risk. Risk appetite hasn't been properly defined. The control triangle is inappropriate, or controls don't work, so residual risk is higher than planned. Some organisations prepare risk registers to help them deal with uncertainty by recording and escalating key unmitigated risks and adapting their risk management strategy. Our basic register may be called a risk log, a risk matrix, an AI application, or whatever it's called in the risk policy. It can be a simple schedule of risks, their scale and action required, or a complex spreadsheet with numerous notes and attachments. Have a look at the components of a simple risk register. But is it that simple? Not really. Risk registers have had some bad press, including the following. Registers cannot record unknown risks. Sensitive risks may be left out as they're just too hard to deal with. They can give an impression of certainty when based on sheer guesswork. They quickly fall out of date. People may see their registers as a boring compliance exercise. What's needed is continual revision to quickly adapt to a fast-moving landscape, fed by things such as team meetings, detective controls, lessons learnt, swings in market expectations and complaints, performance issues, alerts and worrying trends spotted by AI systems. In this way, dynamic risk registers underpin good decision-making, while policies and procedures can be quickly adjusted. Formal risk reporting systems means departments, teams, projects, specialists and associates can feed their risk registers into the risk reporting system, so people at the top get an overview of what's going on and red risks get special attention. In a fast-moving world that's driven by social media, instant video clips and sustainability issues, protecting an organisation's reputational risks may well be its biggest challenge. Instead of a standalone risk reporting system as noted here, we can argue that all reports requiring key decisions should include escalated risk reporting, including transformation strategies and proposed changes to procedures. In this way, risk assessments become an integrated component of the normal business reporting systems. While urgent decisions can be informed by rapid risk assessments, where what we call decision points deal with pressing problems, where the pros and cons are quickly discussed. When you talk to busy managers about risk, you may be told, "Sorry, too busy meeting my performance targets." Just tell them, there's no way this can be done without a good understanding of risk reporting. We know risks are out there, but how do we deal with them? To answer this question, let's look at what we call our 10 possible ways of responding to risk, depending on their potential impact on objectives and whether they are likely to materialise. Our approach boils down to 5 T's and 5 C's responses, which we'll quickly run through. Terminate. This is where the risk cannot be contained at all, or the costs of such containment are prohibitive. Transfer the risk. High impact but low likelihood risks may mean spreading the risk wherever possible. Insurance policies are based on this idea. Take more risk. Upside risk means more risks may be explored to stretch the team by transforming systems and engaging in new and more creative ventures. Tolerate the risk. Some risks will pose no threat and as such can be tolerated. Tell someone about the problem for issues that can only really be resolved using, say, whistleblowing hotlines and staff exit interviews. Check compliance. One response is to ensure crucial controls are actually working as intended. Contingencies. High impact, low likelihood risks can be addressed through contingency arrangements in the event they materialise. Communicate the issues. Where colleagues may have differing views on risk appetite and focused risk-taking versus simply being reckless. Commission some research. Finding out more about the risk is a valid risk response. And finally, control procedures. A principal weapon for tackling obvious risks is better policies and procedures to help direct our business activities. We've placed our risk responses inside the impact likelihood grid to form the adopted risk management strategy, which should inform the approved corporate policies and their underlying business systems and operational procedures. We can now focus on those risks that need to be dealt with by a suitable system of internal control. Most organisations are based around ensuring objectives drive a clear strategy, which will then provide the right results and outcomes. There's one view that suggests we need constraints over the way business activities are planned and performed to take on board known risks, but only where there's a need to set some form of direction when performing an activity or dealing with a transaction. With upper and lower limits covering what can and what cannot be done at work. In our model, A is the upper limit, which relates to cultures where speed, aggression and innovation are key, which means mistakes can arise, while level B relates to slower, more cautious cultures where too much risk avoidance may lead to stagnation and lost opportunities. Preventive controls such as training and screen access protocols come first to stop problems occurring. Detective controls are designed to spot limits being exceeded or where unusual activity is identified. Corrective controls, on the other hand, are designed to put things right within a lessons learned culture, in conjunction with a carefully formulated, risk-assessed control strategy to get to the right results. The end result is an agreed set of control mechanisms that come together to form an entire system of internal control. And here are just a few of the vast army of general control mechanisms that can be supplemented by specific routines that each unique business will put in place. Have a look at each one, as they will affect the way you review systems and judge the effectiveness of controls. Risk management should be something that touches the way people behave across the enterprise. We've used 7 stages to mark one way good enterprise risk management can develop over time. Stage 1. Scattered interest. Specialist teams such as health and safety, project management, insurance and cybersecurity will tend to have a good understanding of the way risk assessments can be used in their specialist areas. Stage 2. Rumblings of research. An organisation reaches stage 2 when people start to look into the topic of risk management outside of the specialist roles mentioned at stage 1. Stage 3. Responsible person. An organisation arrives at stage 3 when it's prepared to appoint a chief risk officer. Stage 4. Top management interest, where risk management becomes a boardroom agenda item by setting a clear policy and strategic direction. Stage 5. Awareness seminars, delivering real changes to working practices through new thinking and a sound learning process. Stage 6. Infrastructure build, where the risk policy becomes more attached to the agreed business routines and procedures. Stage 7. Integrated, into the way the organisation builds risk into its strategy, performance measures, and the way it makes decisions to drive performance. While more urgent action is supported by rapid risk assessments, where 3 things need to happen. 1. Quickly think through the problem. What are the main risks involved? 2. Then apply good common sense that deals with critical risks. 3. And finally, be able to explain what you did and why. There you have it. Risk management and how it seeks to inspire sound internal controls and clear accountabilities across the entire business.
Hope you liked the way we squeezed quite a few different models into your risk and control presentation. Businesses, government bodies, and not-for-profits are all in the front line of major transformations, as artificial intelligence, robotics, cybersecurity, and shifting global landscapes make this idea of risk and control so important. It's something that internal audit has to stay on top of to be of any use to an organisation. There's so much more involved here, and we can only scratch the surface in this introductory course. We've more or less done the heavy lifting, covering your role and responsibilities. Before we leave audit concepts, we need to slow down a bit and look at a few issues that may well affect you as a newly appointed internal auditor. Starting with some of the common misconceptions that may well come your way as you carve out your new role. We need to discuss some of the mistakes you might make that could put you off balance, or even worse, which could lead to a level of stress at work that's hard to deal with. So buckle up and let's get into the next presentation.
And off we go on a ride through some of the common traps that may be out there. What do you say when someone asks you, as an internal auditor, what do you do? This simple question can lead to a bit of debate, since there are many common misconceptions which we need to explore. Some of these misconceptions are based primarily on what we can call the perception of the old-style auditor, associated with several terms as follows. Now check out some of the more dynamic terms that go with the new-look audit teams. Quite a difference, isn't it? And it may explain why some managers and staff members may feel apprehensive about helping you do your audit job, as they assume you're an old-style auditor, which means you may need to break the ice by explaining your role. But it's not only the client who may have an outdated view of your role. you may need to check yourself for some personal misconceptions that we'll cover next. You're not a spy. Your job isn't to sneak around the organisation looking for problems and mistrusting everyone and everything. Your right to unrestricted access to people, systems and records must be exercised responsibly, not by generally looking into things. If, on the other hand, you're examining a claim or specific concerns, then by all means, explore, examine and search for evidence. But please, no general sleuthing with no particular aim in mind. You're not a rebel without a cause. Your job isn't to fight with everyone in some crusade to force business teams to do as you say. You're not an antagonist who disagrees with people dealing with the real-life practicalities where quick decisions often need to be made. You can encourage the type of risk culture which promotes good governance, but you can't change things overnight. Some auditors get burnt out as they see work as a boxing match to get people to do as they say. That must be won at all costs. You're not a superhero. Your job is not to create a major transformation that creates a brand new and improved organisation. Some auditors feel they have to issue reports that immediately solve all of management's most pressing problems. This aim may mean the entire engagement fails, as you're simply trying to do too much. A contrasting and equally poor misconception is where auditors deal with low-level transactions with no understanding of the big picture. There may be occasions where you need to stand your ground and sound the alarm where major risks are running out of control. But this shouldn't be the normal state of affairs, unless in the rare circumstance you come across widespread corruption or neglect. In this case, your only job is to report your concerns, and if this doesn't work, you'll have to seek legal advice. So what are we? We are professional internal auditors. Your job is to be someone who's able to work with managers and their teams on improving the way they make sure controls perform and make sense in dealing with risks, which means in most cases, you're on their side and not part of some secret outfit working to its own end. You're part of the way the organisation makes a success of their business, and your contribution will help management steer the business through rocky waters. There may be times when you may need to explain to people what you stand for, which may simply be someone who leaves each part of the business you visit with more chance of being successful.
How was that? Scary or what? You may want to reflect on some of the traps out there that may mean you won't get the best from your new career. Reflect on them and avoid them.
We need to think about what we see as the heart of the audit concept by looking at what we've called the audit equation. But first, let me ask you a question. What do you think is at the philosophical heart of the audit concept? Choose from our three options: making things better for management, presenting the truth about the actual state of controls, allowing top people to feel assured about aspects of the business. Oops. Sorry for being unfair, but the best answer is all three and more. Your next presentation should hopefully shed some light on what we mean by that.
I'll give it a go, Diane. The audit equation, what it means and why it's a useful tool. Let's touch on what we'll call the audit equation, which is about applying three simple factors when performing audit engagements. This is important since internal audit is one of the few teams who report to the board with a wholly impartial view on what's going on in the business. The idea is to ensure the auditor is able to understand and report on three key and sometimes quite different positions. The first is an assessment of the agreed procedures and working practices, the accepted routines that can be found in the official procedures, manuals and the various business applications. The second factor is what's actually happening in terms of how the team works in real life. And finally, factor 3, which may be seen as the most effective way of tackling the current and emerging risks that confront the business, the best and most appropriate procedures. Where 1 and 2 doesn't match, there's a compliance risk. Official procedures aren't being used in the correct way, meaning risks that should be contained may be roaming freely. Where 1 and 3 clash, control design risk means existing procedures need to be updated and made sharper, because the risk landscape has moved on and the best possible procedures aren't in place. Straightforward, unmitigated risks happens when there's a gap between 2 and 3, which poses a threat to the success of the organisation when standard operating procedures are substandard. Our audit equation allows us to comment on what we've called control design risks, compliance risks, and straightforward, unmitigated risks. Which means you need to look beyond the obvious and drill down into the realities of what's happening in the area being reviewed. By shining a light on what's best, what's prescribed, and what's really happening when dealing with threats and opportunities at work, and sounding the alarm if this means we're getting way too close to real dangers. Sadly, some teams within an organisation have no real incentive to expose risky behaviour, while some senior managers don't want to hear about behaviour that may make them look bad. And this is where you come in. The board and their senior management teams must have a reliable way of knowing whether what's happening should be happening, and whether this is the best way of ensuring success.
Thanks for your interesting take on things, Ricardo. The audit equation is about revealing what's really happening in your organisation. We've pretty much completed part 1 that covers our simple version of the audit concept. But before we get into the next part, there's one more thing we need to do, which is to describe the entire audit process. It would be wrong to go too far into our introductory course without having a quick look at what auditors actually do at work, which is why the next presentation has a go at just that. You know what audit is and what it stands for. Now, we'll jog through the process of delivering your audit services in outline, which we'll be expanding on during your course.
Are you ready for a gentle job through the internal audit process? Let's go through a model that gives you a swift overview of the internal audit process. The starting place for all audit work will be the corporate aims of the organisation, their goals and aspirations, along with the underpinning corporate strategy. In this way, audit objectives should link into the wider efforts of the organisation to succeed. Next is the governance, risk and control framework that guides the organisation and ensures it's able to meet its obligations to its stakeholders in an ethical and accountable manner. We come now to the audit charter, which covers important issues such as audit independence, the reporting line to the board and audit committee, and the scope of audit work, including the balance of different types of audit services. The charter will be approved by the board via their audit committee. We can now set our audit strategy, which takes us from where we are to where we wish to be over a defined timeframe, in line with the agreed budget, covering the entire audit effort, including audit staff and approach, and the automated tools applied to delivering the required services, focused on high-risk areas that the Chief Audit Executive has to report on. The way professional standards are applied arises from the adopted audit strategy. Good internal auditing is about performing professional work whilst having enough independence to do a good job, which is why professional audit staff are so important. With experienced auditors fully equipped to provide a dynamic service. Moreover, this component is the reason you need to be properly trained and qualified. Quality assurance underpins audit professionalism as a way of ensuring that the high standards in place are being achieved. It's also about answering the question, who audits the auditor? The annual, quarterly, and monthly audit plans spin off from the longer-term audit strategy, the audit universe of relative risks of each part of the organisation, in conjunction with the corporate risk profile, will capture the key auditable areas. In this way, linking changing key risks facing the organisation with the associated internal audit plans. A preliminary survey is required before a sensible engagement plan can be drafted for an approved audit. The audit of today depends on understanding the new and emerging threats and opportunities, ranging from a quick look at previous audit files and a conversation with the client manager, to several days of background work involving a full assessment of local business risks. We can now set out an audit engagement plan, which is required for all audit projects. It may be based on work done for the quarterly and annual audit plan, updated by the preliminary survey, with a formal terms of reference, including budgets, due dates, assigned staff and the required tasks. It's time for the actual audit engagement, which is about gathering sufficient evidence to discharge the audit terms of reference, with progress monitored by an audit manager. Engagement planning feeds naturally into fieldwork, then a report which should be dynamic in helping busy managers. The annual and quarterly reports amalgamate the audit work performed in the period in question, with two main components: the audit achievements and a summary of material issues regarding risk management and controls. The quarterly audit report is a more detailed 13-week version with statistics on chargeable hours and productivity, along with the status of each audit. Our final component is audit assurances. The Chief Audit Executive should ensure audit priorities fit changing corporate risk profiles. Assurances should be dynamic and flexible, with major control issues brought to the attention of the board. Assurance mapping can help the board understand how risk is reviewed across the organisation by various assurance teams, and how audit can help improve these arrangements. In an ideal world, audit can reach for the stars by providing crucial assurances on what's working well and what's failing. In this way, audit's not only driven by the board's corporate strategy, but it also helps advance it as well, which is quite a challenge. One final consideration. We started with the objectives and strategy of the organisation. Ongoing liaison with senior and middle management means we should be able to draw a fixed link from corporate aims to each and every audit you perform. In this way, audit services can add best value to the business. That's our swift intro to the audit process completed.
In one sense, your audit process presentation may be seen as a short intro to internal auditing. But don't stop now, as there's much more to do. We'll be expanding on each of the various elements of the audit process that we've just rushed through later on in your course. Now that we've got part 1 in the bag, it's time to go through a few questions to make sure you've been paying attention to the various presentations we've covered so far. The late Professor Gerald Vinton used to talk about Janus, the two-headed mythological Roman god, which he argued could easily apply to the audit role. Someone who looks to the past by pointing out findings from an audit, while also looking towards the future by offering help and advice. Audit has moved far beyond its detailed checking role, with a focus on helping the board improve the way business is being managed in a way that's sustainable, with a focus on corporate integrity. By providing assurances to the board where all is well, while flagging up areas in need of improvement, and also providing consulting services to managers. We said that compliance is a fixed part of the auditor's agenda, not as the main issue, but as an important consideration that may undermine the integrity of the risk management and control procedures. If controls aren't being properly observed, management may incorrectly think that everything's working well. Poor compliance can arise from the culture in place, driven by the way more senior people behave. We split our model into two main groups: the status of the internal audit function and the personal objectivity of each and every auditor. If you do great work and are fair, balanced, and also impartial, then this is a good start. But audit needs to have the right status for their results to make a difference. Before we close, let's hear a few words from Kenneth, our audit guru.
I promise to give you my take on things as we come to the end of this first part of your course. So here goes. The IIA's global standards discuss the idea of organizations serving the public interest of various wider stakeholders and how internal audit can help promote public trust and confidence. We now have to accept that rapid disruption leading to AI-sponsored transformation means many twists and turns are very hard to predict. Corporate navigation, driven by agile responses, solid resilience, and a determination to succeed, has replaced the steady-state strategy of old. Many organizations are striving for rapid transformation, then some stability, then back to rapid modifications as new risks suddenly emerge. But what about the realities that lurk below the surface of the iceberg? Senior executives who sit on the main board tend to work as a team who see things from the same essential standpoint, which is all very well, but they should have access to voices that tell it like it is, in the murky water below. And this is where audit comes into its own, as an impartial voice that's always dependable, able to speak up to super confident people who are normally on top of their portfolio, but who need to be told where they may be going wrong in handling new risks that are appearing out there, or where they aren't able to understand problems and challenge their managers and business associates. What do you see here? It's only by seeing beyond the obvious that we can look deeper and see more of what can be the hidden reality of organizational life. Many philosophers have said something along the lines that everyone hates the person who tells the truth about poor risk cultures, but we do so without fear or favor. Audit work is immersed in promoting sound risk management with excellent controls, and a poor risk culture exists where there's no room for dissent, which means we may well have to act as disruptors when required, by looking deeper than most, by asking uncomfortable questions, and by questioning comfortable answers.
You may want to take a break before you get into the next part. Welcome to part 2 of your Introduction to Internal Auditing. Here's a reminder of the course aims, which is essentially to get you to understand the basics of internal auditing based around a number of specially designed models. Your course is delivered in 4 main parts that should come together to form a useful introduction. And here are the various topics that form part 2 on auditing procedures. Part 1 was about our role and context, while this part deals with some of the more practical things that need to be in place to ensure a successful audit service, which is about having suitable policies and procedures that underpin the audit function. Part 2 covers quality assuring the audit service, the audit manual, audit evidence, and audit interviewing. How about a quick question from Diane?
Thanks, Alice. Your policies and procedures should be based around the global auditing standards and guidelines. Now let me ask you a question. Which response would you choose? A, B, or C? Comply, don't worry, or try to comply. This is actually a pretty tricky question. B is wrong, while A seems more on track. Although C may well be the most appropriate response. Say the audit team are not IIA qualified, then the position becomes a bit blurred. Or where audit consists of a very small team that's finding it hard to meet the standards, again, it's not straightforward. Some public sector teams may likewise struggle to meet all the requirements. The reason C may be the best choice is that all teams should seek to comply, or they must disclose those aspects where they fall short and have a sensible plan in place to get up to speed. Moreover, the board and audit committee, along with regulators, will not be impressed where there are gaps. Right then. That was an interesting question. But how do you know whether you're complying with the global standards? Have a go at my next question. Compliance with the IIA global standards depends on having a sound quality assurance and improvement program in place. Is that true, false, or debatable? I'd go for true, and the reasons are explained in Ricardo's next presentation.
I'll give it a go, Diane. We'll have a look at some of the ways the Chief Auditor can make sure the audit function has a sound quality assurance process in place. The Chief Auditor should have a quality assurance process in place for their audit function. We'll be explaining some of the basic ideas behind good quality assurance for internal auditing. We start with the use of professional auditing standards as a backdrop to achieving good quality. The Chief Audit Executive should advise the board that there's a suitable quality assurance and improvement program in place, which is about having standards in place that are properly understood and used by all staff. The idea is to focus on professionalism, continual improvement and consistency, using the adopted QA mechanisms to form a whole system of control. It would be wrong for internal audit to be portrayed as experts in control, while not being able to show how they're able to control their own services. Audit work has to be properly supervised, based around ensuring auditors comply with procedures. Supervision is a two-way concept, involving review of working files and sign-off by the supervising auditor and ultimately the chief auditor, while the field auditor should be able to call on their supervisor if required. Too much supervision slows down the job and stops an auditor developing, while a lack of supervision means things can go wrong. The audit manager should carefully balance these two concepts. Now for internal reviews, have a look at some of the things that may be included in an internal review of the way audit work is carried out as part of the quality arrangements. An audit manager can be asked to complete this task based on a small random sample of recently completed audits, reporting back to the chief auditor, say, each quarter. This role should be rotated between audit managers. Audit's key performance indicators would form a separate control for all audit work, covering things like time overruns, outstanding recommendations, and audit client feedback that will highlight isolated problems that need to be addressed. In contrast to external reviews, which have a much greater scope, important stakeholders such as the audit committee and the main board will want to know that audit's working well. IIA standards say that external assessments must be conducted at least once every 5 years by a qualified independent assessor or assessment team from outside the organisation. External reviews are important, although your internal self-assessments may be performed in lieu of a full external assessment, as long as they are validated by a qualified, independent, competent and professional external assessor. Where there's an issue regarding the way audit staff are performing, then this should pop out of the quality programme. So improvements can be made to staff training and personal development programmes. Each audit you do is part of your personal development and an important opportunity to learn and grow as you gain valuable new experiences. Quality improvement isn't a tick box exercise. It's about growing the audit service to ensure it's fit for purpose. In this way, the audit manual can be updated to ensure it's both sharp and relevant. If you can think about any ways of improving how you work, what you do, and how you use your audit manual, then talk to your manager. Your QA process should be used to improve the way audit's managed and audit work that meets all aspects of its terms of reference. Audit clients and other stakeholders should feed into the quality programme by providing feedback through, say, end of audit satisfaction surveys. The idea is to strive for excellence through the way you use your professional standards, methodologies and audit tools. Your team will have their own unique QA process to ensure that all audit work is up to standard and enhances the value of audit services being delivered to the organisation. That's all, folks. Quality is about doing the right things in the right way, the focus being firmly on this idea of continuous improvement.
How did you find the presentation? The bottom line is that you are part of the quality assurance process in your audit team. Working hard, being professional, and delivering good value should be in your DNA. And most importantly, using the right auditing procedures in the right way.
We've been working on the fundamentals of a strong audit team, with sound procedures backed up by a quality assurance process that seeks to make improvements as part of a dynamic learning culture. But how do we put this all together? What is the best way to build auditing policies and procedures into an integrated platform that all auditors should be able to access and understand, choose from? Weekly team meetings, the audit manual, or the performance appraisal system? We've gone for the audit manual as the best vehicle to pull together all the guidance, direction, and standards that drive audit work, which is what you'll be covering in your next presentation.
And it's my job to do this, the role of the audit manual in outline. We've developed a summary framework for applying the audit manual that we'll run through. The audit manual provides a set of quality procedures that help the audit team perform and succeed. While the audit charter sets out the role, responsibilities, and independence of internal audit and its reporting relationship with the organisation, it allows access to all parts of the business to enable the delivery of professional auditing services. Meanwhile, the audit team must ensure they apply the right professional standards, using the right methodologies, along with cutting-edge auditing tools and apps to ensure they do a good job. That make an impact in adding value to the way the organisation performs. Good internal auditors understand and apply these concepts, knowledge and tools in the best way possible. Short messages about the audit service on the corporate website can be taken from the manual, and there are loads of topics that a typical manual will cover. In this way, your audit manual helps guide and direct what auditors do and how they do it, and how they're supervised and reviewed to ensure all standard operating procedures are being applied properly, which feeds directly into the wider quality assurance improvement programme as an important component. Where the audit team's highly trained and qualified, there's less need to set out all working practices in great detail. The aim is to guide and direct auditors without turning them into robots that can be replaced by artificial intelligence. Update your manual whenever changes are made to the charter, the professional standards along with the analytical tools, approaches and techniques. The audit manual will also contain more detailed guidance on loads of other things such as the role and structure of the audit team, standards and quality assurance, the way long-term plans and risk assessments are carried out and approved, reporting to the audit committee, risk-based auditing, assurance and advisory services, the way engagements are planned, performed and reported with a focus on evidence, conducting interviews, checklists and standardised spreadsheets, along with all manner of things that require some form of dynamic, agreed methodology. These will all need to be set firmly within the official corporate policies and procedures in place to guide your organisation, which means your manual isn't a standalone device. It's a dynamic part of the way you contribute to a successful organisation. Get to know your manual and make sure you're able to deliver its contents.
Your manual should be your best friend. Check it, know it, and always use it. This is really important for ensuring you do solid audit work. A great deal of auditing hinges on the need to secure reliable evidence, which is what we'll deal with next.
Let me pose a question. Audit evidence needs to be convincing to get management to act, which means as much data, observations, and other content as possible should be secured. Is this true, false, or debatable? I've gone for debatable. In an ideal world, we should get hold of as much as possible. Data analytics and AI apps may mean loads of information can be quickly analyzed where necessary. So long as this doesn't lead to an overload of results, The reason it's debatable is that careful use of sampling, where a small amount of data can be used to make fairly wide conclusions, is a very useful tool. We'll explore this idea in Ricardo's next presentation.
Exactly. It's my pleasure to take you through your next presentation on audit evidence, which is a fundamental issue for the audit process. We'll also have a quick look at sampling and how it can be used as a shortcut to getting sound results during your audit. How about a few tips on audit evidence? Time spent on one audit equals time not spent on another, which means testing for suitable evidence cannot be open-ended. You need to use some kind of standard such as define the test objective, say examining the effectiveness of key controls in area X to judge the extent of problems. Define the testing strategy. This lists the tests required along with the way evidence should be gathered. Formulate an audit program. A schedule containing fields for the samples to be examined, the tests to be performed, and results. Perform the test, which is the main part of the testing process. Schedule the evidence. Interpret the results in line with the audit objectives and summarize them in a fieldwork summary. Determine results and next steps. Say whether there's a need to perform more work or change the direction of the audit. And finally, report the results. Testing enables you to form an opinion and place this into the fieldwork summary. But how do you test a system? And what are you actually testing? One way of answering this question is to define different types of tests. Start with the system's objective in terms of what the activity, team, or project is trying to achieve. Next comes what we can call control objectives. That is achieving system aims, but also ensuring the integrity of information used, that there is no waste or likely fraud and abuse, and all relevant values, laws, and regulations are upheld. Then we have the key controls to mitigate risks, which we've called control mechanisms. We can now decide how to best focus our testing strategy at the different types of tests. Walkthrough tests seek to determine how the system's objectives are achieved by tracing a small sample through the system to ensure that the auditor understands it. Compliance tests seek to determine whether control mechanisms are being properly applied and adhered to. Substantive tests seek to determine whether control objectives are being achieved. Weak controls make this less likely, while dual-purpose tests check for both compliance as well as error, abuse or inefficiency as a practical way of gathering evidence. We know that testing aims to produce good evidence to support your findings. But what is good evidence? We can answer this by saying your evidence should be sufficient, relevant, reliable, and practical. Let's take each one in turn. Sufficiency. It should give a rounded picture of the facts and not just be based on isolated cases, enough to convince a reasonable person that your contention is valid. When you have enough, stop. Relevancy. It should shed light on the audit objective. Relevancy means the material you've gathered relates to the issues in hand. Reliability. The evidence should be sound, it should be objectively obtained, contain no flaws, and convince anyone reading your report that it's trustworthy. Practicality. You can only access the available evidence, and there must be a sensible cutoff for all audit work. Practicality means weighing up costs and benefits of gathering evidence. We've added fake news. Your evidence indicates the source, how it was examined, how it was stored, who accessed it and when, and how it's been presented to support your audit. People producing fake news don't worry about any of these things. We now need to get hold of our evidence. Next question is, where do we get it from? How about a list of possible sources? Re-performance is about rechecking a calculation or procedure for evidence as to its reliability. Inspection is a formal way of observing physical attributes against a set criterion. Observation is a useful method of information gathering, since it is obtained first-hand by the auditor as long as it's not stage-managed. Corroboration means having facts from one area confirmed by reference to another party, so verifying the accuracy of these facts. Expert opinion is less a technique and more a source of assistance for important specialist issues. Reconciliation is the process of balancing one set of figures back to another related set to assess whether systems are in balance. Independent confirmation of direct facts relating to dates, times, figures, agreements, and so on means they can be readily double-checked. Interviews are important since the best way to find something out is, often, simply to ask. Apps based on mathematical models may be used to gauge particular features of an operation. Questionnaires and surveys can be used to shed light on perceived opinions or levels of awareness. User satisfaction surveys can provide direct feedback from people who use a service or product receiving the service, as a client is one way of gaining insights in how frontline activities are carried out. Reviewing published reports and research can support your findings so long as there's no bias. Comparisons such as vouching where one item is checked against another associated item can be useful. For more sensitive methods such as staff awareness surveys, you should make it clear to management that the exercise is being undertaken. There are occasions when auditors need to extract a sample so it can be examined, which means audit teams will have a policy on sampling, so there's an agreed way of gathering evidence from large files. Many systems and apps can perform 100% checks on files and systems to assess whether transactions are correct and whether processes are working properly. While artificial intelligence apps can be used to address probing questions posed by the auditor that allow rapid sweeps of systems and related processes, which makes sampling less relevant for some data files, although occasionally the auditor will have to decide whether or not to use some form of sampling technique rather than be guided by their judgment, or what some call the audit nose, when selecting items to examine, and whether their results need to be defended against bias through a proven method of defining sample sizes and selected samples. Relying on statistical sampling may mean relatively small samples can be used to draw clear conclusions. The normal distribution places attributes of the entire population in the shape of a bell, with confidence levels based on the standard deviation, which means the sample selected should reflect the same attributes as the much wider population. To a stated percentage of reliability, compliance tests look for the correct use or otherwise of a particular control, with a yes or no test applied to the sample. While substantive tests, on the other hand, establish the extent to which the implications of a control weakness may be quantified in terms of, say, the estimated value of errors found. In this way, tests applied to a sample used by the auditor can be used to form a valid opinion on the entire population in the file examined, as sound evidence to support the audit report. That's it, our quick dip into this idea of audit evidence, what it means, how it's obtained, and how it can be applied.
There's no room for non-compliance here. Standards on audit evidence are really important, and every auditor should be skilled in understanding and applying these standards. One audit report that falls down as a result of unreliable or biased evidence will cast a worrying shadow over the entire audit function. We find things out by searching our systems, extracting data, and drawing key conclusions from this analysis, using samples where appropriate. Having said that, one great audit procedure is to simply get information from the horse's mouth, that is, by talking to people in the know, which takes us to the importance of interviewing as a useful device and a significant technique. Ricardo's next presentation has a quick go at tackling this topic.
And here it is, a few simple tips on audit interviewing. How about a short presentation of some of the things you may want to consider when conducting an audit interview? The best way to get information for an audit is to ask people who know about the system. You should always be polite, but you can't be an auditor while being afraid to ask searching questions when required. We'll be focusing on fact-finding interviews that help progress a risk-based audit engagement. It's best to have a basic format in mind when setting up and completing your interview, which may be face-to-face, over the phone, or via an online screen. Whatever the format, don't go into an interview unprepared. Our model contains 5 simple elements that cover the actual interview itself, starting with introductions and explanations, where you should introduce all parties present at the interview and explain their roles. You can then outline your audit and what it aims to achieve in terms of its objectives. The questions and answers bit will be at the heart of your meeting. You should have familiarised yourself with the area under review, and you really don't want to stop asking questions without all of them being answered, as it takes time and energy to arrange a get-together. Right now, you should be in listening mode. When you've got all the information you need, you can wind things up by rechecking what's been discussed and any outstanding matters. You can recheck key facts by summarising them. It's good practice to ask for any final questions at the conclusion of an interview. Aim to maintain a positive atmosphere by telling the client exactly what's going to happen next. Even if the interview has been hard work, don't forget to close it by issuing a formal thanks and leave the door open for following up any new matters that may arise. Most audits focus on helping make things better. Investigations are a bit different as they try to unpick what can be a difficult situation. The golden rule is, don't convene one if an email or phone call will do. Your interview is an interaction between two or more people. It's about sending and receiving messages, as well as providing feedback. Your code translates your thoughts to what you want them to mean, although this has to be decoded by the other party. Easy? Or can it present a challenge? The answer is, it can be challenging when noise interferes with the messages sent and received, which can create an annoying fog. This noise occurs where external factors interfere with communication, and this ranges from distorted perceptions through to low-flying aircraft. Here's just a few of them. Guarded responses from the client can give incomplete information. Trying to understand what the client is worried about can help shift the client's position. Poor timing can result in the client being too busy to spend much time on each audit question, which means you need to explain the importance of the audit. Defensiveness can result where the auditor is seen as posing a threat, and you may need to explain your role. Personality clashes can spoil the whole interview process, although you should always maintain a polite decorum. Jumping to conclusions may turn the meeting into a farce. It's not about engaging in a who knows best battle. Poor listening by the auditor will frustrate the client, so employ dynamic listening with positive reinforcement to understand the messages provided. A general air of mistrust can result from constant checking and rechecking by the auditor, so make clear why you need confirmations. Polarization of views may be encountered, which means you should accept that people may well have different views. A poor reputation by auditors may lead the client to take a flippant view, so explain that audit has moved on from a gotcha approach. Information overload results from too much jargon, and if the auditor does not own up and seek clarification, much detail will be missed. Unclear ideas lead to confusing thoughts being conveyed, so you need to do your research beforehand. Language problems may arise with accents and terminology, which means constant feedback may be required. The auditor's personal bias may distort an interview, so you should always remain objective. You need to be aware that unspoken issues can give signals of issues that should be probed. Reluctance from the client does not necessarily mean this person doesn't wish to cooperate. It may simply be that the noise and fog we mentioned needs to be demystified. Where an interview is not working at all, it's generally better to cut short the meeting before it actually breaks down, and think of adopting a new strategy to secure the necessary information. Interviewing is an important skill, and it's best to get as much experience as possible.
Fog and confusion can be so worrying. Basic misunderstandings may make a simple audit really complex. And remember, training courses are all very well, but as with most things in life and in work, practice makes perfect. That's part 2 more or less done. Here's your chance to tackle a few questions to show how you've been able to concentrate on some of the things we've covered. Audit work has to be properly supervised, based around ensuring auditors comply with procedures. Supervision is a two-way concept, involving review of working files and sign-off by the supervising auditor and ultimately the chief auditor, while the field auditor should be able to call on their supervisor if required. The audit manual feeds directly into the wider Quality Assurance Improvement Programme as an important component. The aim is to guide and direct auditors without turning them into robots that can be replaced by artificial intelligence. We argued that audit evidence should be sufficient so that it gives a rounded picture of the facts. It should also be relevant so it sheds light on the audit objective. Reliable with no obvious flaws. And we added practical so it's worthwhile securing it. When you've got all the information you need, you can wind things up by rechecking what's been discussed and any outstanding matters. You can recheck key facts by summarizing them. It's good practice to ask for any final questions at the conclusion of an interview. Aim to maintain a positive atmosphere by telling the client exactly what's going to happen next. Right then, let's slow things down before we close with a few words from Kenneth.
Thanks, Diane. I'm glad you said slow it down, as that's exactly what I plan to do. So relax, everyone, and let's go on a gentle jog. In the past, auditing procedures were quite straightforward. Planned audit work was rolled out and performed on an annual basis, changing slightly as new priorities emerged. Nowadays, organizations may well bob around in rough seas trying to stay on top of a fast-moving world. Audit work based entirely on analyzing data will in the future be performed by a suitable AI app. Set a criteria, ask a question, and the app will present an instant response. This contrasts with insightful and therefore high-impact audit work means dealing with people and how they behave and using the right tools to gain these valuable new insights. It has never been more important to have a strategy in place that ensures the audit team does not sink in rough seas. Have a look at my model, where corporate aims drive the task of keeping strategic risks under control through an astute risk culture, while our audit universe needs to reflect the realities of how the business navigates its landscape, and the way the required audit services need to flex to these challenges. Where the existing audit function doesn't fit what's required, then audit staff, their grades, their expertise, the analytical tools applied, along with the applications and procedures used to accomplish the audit mission, must change. Along with the accompanying audit digital transformation strategy, whose implementation should deal with the realities of turning aspirations into actions. Solid performance indicators can be used to measure the success of this implementation, which means the CAE should spend a great deal of time talking to key players in the organization to get to grips with the changing risk landscape before preparing audit plans, ensuring audit is working well and energizing their team, which is not an easy task.
You may want to take a break before you get into the next part. Welcome back. You're now starting part 3 of your introduction to internal auditing. Here's another reminder of your course aims, which is to give you an understanding of the basics of internal auditing, based around a number of specially designed models. Your course is delivered in 4 main parts, which should come together to form a useful introduction. You will have covered quite a bit in parts 1 and 2, which sets the groundwork for doing professional audit work. Now it's time to get into this idea of doing the actual job by covering some of the important types of work internal auditors are expected to perform during their careers. Part 3 covers an overview of risk-based auditing, consulting services, business procedures, value for money, internal investigations, the fraud triangle, and change management, and finally your case study. Let's start with a few questions from Diane.
Absolutely. Have a go at your first question. There are many ways of categorizing audit services. Which one would you say is most suitable? Compliance reviews, advisory work and investigations, risk-based reviews and investigations, or risk-based reviews, advisory work and investigations. We'd go for C, One way of viewing audit services is to break them down into reviews that provide assurances on the governance, risk, and control processes, consulting and advisory work to help managers, normally to do with managing change and achieving efficiencies, and lastly, internal investigations for management to address specific problems. We'll be touching on all three of these audit services. Now, let's explore this idea of three main types of audit services. That is risk-based reviews, advisory work, and investigations with another question, this time a true or false quiz. Risk-based reviews that provide assurances to management is the cornerstone of internal auditing. It's the best use of audit time. True, false, or debatable. We believe it's true, which is why we'll be spending most of our time on this approach. With just a quick mention of the other two, starting with a presentation from Ricardo that aims to give you a brief overview of the risk-based approach to audit reviews.
That's right, Diane. A brief overview on what is a key part of your course. We'll be going through our approach to risk-based audit engagements. It includes many of the things you may want to consider when performing a basic planned assurance audit. Starting with planning. The annual and quarterly audit plans will contain a statement on what needs to be covered in each planned engagement. Basics such as a time budget, staff assigned to the work and timings will all be part of the preliminary survey before it becomes a formal engagement plan. Outline objectives will need to be firmed up through discussions with the clients. Next comes the task of ascertaining and isolating the system or activity for review and distinguishing it from parent systems, subsystems, parallel systems, and linked systems. We can now carry out an initial evaluation of the risks impacting the area in question, along with the required controls, so the auditor's time and effort can be directed towards high-risk aspects. We can now define the test strategy, which is about looking at what should be sound controls that are being relied on. The idea is to ensure they're working properly, while also exploring parts of the business where controls are weak and key risks may not be being properly mitigated. Testing allows you to identify the degree of actual error, abuse, failure, and other such risk exposures. Don't forget about compensating routines that may be used to cover known gaps in official controls. Testing allows you to form an opinion on the state of controls as evidence is gathered about what's working well and what's failing to deliver in terms of managing known risks. The audit opinion will tend to focus on two things: whether the risk policy is being properly applied within the agreed risk appetite, and whether controls are working well and being properly observed. Communicate the results covers all efforts to convey to management whether what they're doing is working well or whether there's a need to improve things. It involves talking to the management throughout the audit, as well as issuing a formal draft and final report based on the evidence gathered. We close with follow-up, which is there to ensure the value from the audit has been built into any changes agreed by management. Audit recommendations are only useful if they result in dynamic change for the better, and not through managers promising to make changes simply to get the auditors off their back. We've run through the essence of risk-based auditing, but does that mean you've got to remember each part of it? The answer is no. Not at all. We can summarise our model into three simple elements. That is, planning your audit so that it makes sense, doing the fieldwork by securing the evidence needed to discharge the terms of reference for the engagement, then reporting the results. Which means we can now do a bit more work on the risk-based approach, focusing on these three elements, starting with engagement planning. But first, let's take a step back. A great deal of work's required before an annual audit plan is prepared and approved, which is then broken down into shorter periods of, say, a quarterly audit plan and even monthly audit staff work schedules, so that audits can be assigned to individual members of the audit team, with a lead auditor. After which an outline engagement plan can be given the green light by the audit manager in question. But this is far from being an agreed engagement plan. There's still an amount of work to do. Assessing local business risk factors means you can now clarify your audit objectives and formulate the engagement plan. No audits can cover everything within a specific operation, and the plan states what will be prioritised in terms of what will be done and what won't be covered. Whatever the adopted approach, your engagement plan will feature an audit programme setting out the required tasks, including time budgets, logistics, the lead auditor and audit team if required, and which analytical tools will be employed. Your terms of reference and scope should be discussed with the client before it's signed off by an audit manager, which is why audit managers often accompany their lead auditor when meeting with the client to discuss the new audit. Some audit teams vary their approach depending on how well established the risk management process is. Less developed risk management arrangements may need help, support, and even formal training. More mature setups will benefit from a straightforward audit review to assess how well controls are working, while disorganised or even reckless business teams may well need a focus on compliance checks, looking for red flags. You have an agreed engagement plan. Now for your main fieldwork stage, which is about gathering all the required evidence, let's run through our version of the fieldwork summary, which contains the operational objective, which the client's required to achieve, the risks that impact the ability to achieve these objectives, the way they are assessed and prioritised, the mitigations currently in place, the results of audit tests applied to these controls, the extent of unacceptable levels of residual risk and their impact, what's required to deal with this gap, the person who needs to take the required action, which we've called the risk owner, and how this action will be measured and reviewed. Your main fieldwork stage depends on gaining a more detailed picture of the systems and processes in place, and there are several options for doing this, in conjunction with the client manager. 1. Narrative notes which set out what happens, when, how, and by whom in a series of numbered notes. 2. Block diagrams of each main part of the activity, along with links to other related systems. And 3. Flowcharts generated by a suitable AI app, showing the activity and flow of information and decisions. We argue that the fieldwork summary is the central document used to capture your entire audit from start to finish. You can then use it to drive your draft report's findings and recommendations. The work you did at the preliminary survey can be placed into the summary as system objectives and key risks. The key risks in the area being reviewed will have been rated in terms of their impact and likelihood before defined controls are applied, which will drive your audit. You will have made an initial evaluation of these control measures, after which you can start testing the way they are working, which means populating your evidence schedule with the results, which will record the source, tests applied and impact of each piece of evidence. Your evidence will come from a variety of different sources, and for each test carried out, it's important to define the objective, what was done, the results and the impact on the audit. Then feed the results into your fieldwork summary. Your fieldwork summary allows you to stand back and consider the various problems and underlying causes and possible solutions based on the wider picture. While the underlying details will end up in your audit files, the final component is the draft audit report that goes to the client in question. In this way, the fieldwork summary can be used to capture the planning, fieldwork and reporting stages of your audit, driven by and geared into the objectives, risk and controls that relate to the area under review. We turn now to audit reporting, which comes towards the end of our risk-based auditing model, as the end product of a process that starts with comprehensive audit work. You can use your fieldwork summary as the main reference document for the wrap-up meeting, where material issues will be discussed with the client. This dynamic document will also feed directly into the draft audit report in that it will set out what was done, what was found, what it means, and what now needs to be done. You can then use it to prepare your draft report. One useful technique is to talk to your team and your audit manager about your findings and take them carefully through the fieldwork summary. Then go to the next step, which is to talk to everyone who's affected by your audit and get their feedback. Remember, these discussions should be going on throughout the audit. Finally, go back to your summary and use it to determine your opinion and prepare your report. Always think about how you can help the business and inspire the required action. It's by involving the client that you can get them to accept your work and approach, and how the audit will benefit them. Your job is to assure management that all's well. If not, you'll need to alert them to any particular problems and then furnish some degree of advice to assist them, with the overall aim to inspire effective action by those responsible for dealing with the issues raised in your report. You should use the report structure that's been adopted by your audit unit. It will include things such as the executive summary, conclusions, opinion, and any recommendations. Whatever the agreed format, your findings should cover the condition, what you found, the criteria, what you expected to find, the cause, what caused any difference between the condition and the criteria, and the effect, the implications which will come from your audit testing. In the end, your audit report's all about your opinion on the significance of residual risk and whether this is acceptable or not. Any disagreement regarding acceptable residual risks should be discussed with the client, and if there is no agreement, the audit opinion will still have to be fully reported. When you prepare your report, remember, most managers are very busy and don't have time to read a boring audit book. They just want to know whether anything is wrong, the options for sorting it out, and what will happen if they do nothing. Follow-up reports are interesting, as they mean you have to use your professional judgment on the extent to which appropriate action has been taken. You may also need to do some more testing to ensure you have a good understanding of the impact of any new risk mitigations or the lack of effective action. In busy organisations, time is money, which is why risk-based auditing concentrates on what's important to the client. Let's go through a straightforward process for clearing the audit report as follows. A wrap-up meeting with the client to discuss the findings. Although these conversations should be happening throughout the audit, the draft report can be prepared and reviewed by someone like an audit manager. The chief auditor may want to skim through the report since everything goes out in their name. The draft report can be sent to the client for consideration, where issues such as accuracy, completeness, and the way findings are presented may arise. When these have been resolved and an action plan agreed, we can think about issuing the final published report. Remember, it is this agreed action plan that creates a dynamic vehicle for change. That's your presentation on the risk-based approach done.
I'd say that the last presentation is probably the most important aspect of your introductory course. It's about doing fundamental bread and butter audit work. Rather than throw in loads of quizzes, we'll take you on a gentle jog through a simplified case study that has a go at bringing out some of the more practical aspects of risk-based auditing. There's no one way of doing audit work, and you'll use the methodology adopted by your audit team and set out in their audit manual. Our approach is pretty basic and only tries to bring out some of the main pointers from your presentations on risk-based auditing. Bearing that in mind, let's skip through your case study. For your case study, you can spend as long as you like on each page. We start your case study with a note in the annual audit plan, which includes an audit of the corporate fraud policy. This audit was requested by the Audit Committee as an important feature of the internal control framework adopted by the board. Your case study revolves around the three main stages of an audit, which we discussed earlier: planning the work, performing the fieldwork, and then reporting the results. In this straightforward example, we'll use the fieldwork summary to focus the audit work. The engagement planning stage will be about thinking through several key issues that you can scan through. And you'll want to conduct a preliminary assessment of the risks relevant to the activity under review, while the agreed engagement objectives will reflect the results of this assessment along with a suitable budget and program of work which will be placed in your audit file. So the annual audit plan includes an audit of the corporate fraud policy that was requested by the Audit Committee. What sort of things would you want to consider as part of your planning stage? In your case study, the audit manager assigned the work to a lead auditor who carried out the following tasks. Take your time and scan through this list of tasks that were completed by our auditor. As a result, the lead auditor prepared a preliminary survey audit report. This report was reviewed by the audit manager and signed off by the CAE, and contained work to be carried out, the draft terms of reference, and a recommendation to start the audit as soon as practicable. Because it was such a high-profile topic, it will be presented to the audit committee for comment. It's now time to prepare an engagement plan. What would you include in such a document? The answer would vary depending on the methodology applied in the audit unit. So in one sense, there's no right answer. Look at the engagement plan that was completed by the lead auditor and audit manager. Meanwhile, the audit team were briefed as follows. The lead auditor will manage the job in the field and update the client contact, the financial controller. The audit manager will visit the location to check progress and discuss any concerns. The two audit staff will spend a week each on assigned tasks. The audit administration officer will organise hotel and travel. And finally, the work will focus on the fraud policy and whether it's being properly disseminated across the organisation. Having set the form and direction of the audit and agreed that it should go ahead, the next stage was to plan the work involved and resources required. A further meeting was held between the financial controller and the lead auditor to discuss the system objectives, which would drive the audit effort. Remember, we are dealing with risk-based systems auditing here, which is about reviewing the way risks to achieving aims are being managed. Some auditors use control objectives relating to what needs to happen to stay in control to help guide their work. In this case, it was also agreed that the audit should be guided by the use of these three control objectives. Several key questions had to be addressed as a way of focusing the planning stage. There you have it, your engagement planning stage. If you don't have a good plan, you can't have a good audit. It starts with having a clear focus and aim. Auditors can only achieve so much, and it's crucial to focus your energy on the right things. Planning gives you the shape and depth of the audit. It even tells you whether it's worth doing much work in the area in question. You just don't have time to waste doing things that don't focus on how to help the business survive and prosper. Now you've got your target, it's time to get into the fieldwork stage, which is coming up next. This is about securing and analysing enough evidence to achieve the engagement's objectives and documenting the results in evidence schedules that will feed into your fieldwork summary. The fieldwork involves finding out about the area or activity under review, which is what we called the ascertainment stage in our model. In this case, the fraud policy and what it's seeking to achieve. Along with the associated fraud response plan, which was also examined as part of the audit. The formulation of the policy and updating procedure was described by the financial controller and documented by the auditor as a simple diagram. The lead auditor also met with some of the directors to discuss their input into the 2-yearly update of the fraud policy and the inclusion of the latest fraud policy in the staff handbook issued online to all new staff. As part of a walkthrough test, the auditor was shown the last update file by the financial controller and viewed email comments received from various directors. A diagram of the way allegations are dealt with was then prepared by the auditor. All of which was driven by the fieldwork summary that captured several things in each of the various columns, such as key risks that have been rated high in terms of impact and likelihood before controls are applied. These risks drive the evaluation in terms of key controls that are in place to mitigate the risks. The auditor's initial evaluation of these control measures. Which tests should be planned to assess the reliability of these controls, and finally, the impact of non-compliance and general weaknesses through poor controls, which will be placed in the opinion and recommendations column. Which meant an evaluation could be undertaken by the auditor using the following. Control Objective 1, to ensure that all employees understand fraud risk management. Having established the process for preparing, updating, and disseminating the fraud policy, the auditor evaluated the existing arrangements using the fieldwork summary. Testing comes next, and this stage of the audit is based on implementing the audit testing strategy. Have a look at the evidence and notes of the audit work that was carried out that are used to populate our fieldwork summary over the next few pages. Then Control Objective 2, to ensure that all suspicions of fraud and irregularity are reported and properly investigated. And finally, Control Objective 3, to ensure that appropriate action is taken after the investigation has been completed. The required tasks should be carried out in the most efficient and effective way. In fact, the audit involved setting a precise test objective for each of the tasks in question. Not all these tests are shown here, as extracts are used to provide an idea of how this stage of the audit was carried out. We turn now to a test schedule for Control Objective 2, the corporate human resource database of 10,500 employees. The following tasks were carried out. HR database searched and sorted into 2 groups. 2 questionnaires were designed, one for the first group of new staff and the other questionnaire for the second group of employees, staff over 6 months in post. Let's continue with our fieldwork summary. Here's an extract from the staff questionnaire for Group 1. Dear ABC, you have been chosen at random to take part in a survey on levels of awareness of the fraud policy. This information will be confidential and is not part of the whistleblowing arrangements. We appreciate your assistance and ask you to return the survey to XX by 20XX. For further information about this survey, please do not hesitate to contact Fred Fredericks on XXX. And here are the results of the staff survey. We said that the fieldwork summary will record all that has happened during the audit, and it will indicate what the system is trying to achieve, the systems and control objectives, the operational risks identified and assessed that impact on the ability to achieve these objectives, the test strategy and summary results, and the audit opinion and associated recommendations. Your fieldwork summary continued. Well done! You've completed your audit fieldwork. You've got loads of information and data and the results from the time you spent analysing the available evidence. Making good use of your fieldwork summary, it's now time to prepare your draft report, which starts the process of placing your work on the record through your formal final published audit report. But before you can do this, you'll need to make sure you've done a good job. Can you think of a list of questions that you would want to ask yourself to ensure your report will be reliable? Look at our list of some of the things you might want to consider. You can now report your work while making sure it's both accurate and fair. But before you can do this, you'll need to ask yourself several questions. Which means you'll need to formally communicate your engagement's objectives and scope, as well as your conclusions, recommendations, and action plans. In an e-business context, this may consist of a verbal briefing and short schedule, not unlike the fieldwork summary, that says what was considered, what risks were assessed, what the auditor found, and what can be done to improve risk management and specific controls. Although the traditional approach is to prepare a formal audit report, and this report becomes a published document which is available to authorized parties. Moreover, the contents of the fieldwork summary can be used to prepare your report. Here's one version of the executive summary, with extracts only for Control Objective 2, responding to fraud. Have a look at this draft report and make a few notes of which aspects of this report can be improved. You should find at least 3 major mistakes. Internal investigations is misleading and would be better defined as assurance audits. All staff have the capacity. Isn't right, as this is a specialist skill. It would be better phrased as there should be a capacity. Note that several staff members could not be bothered to help us. is a childish sentence. It could be reworded as something such as, "We extend our thanks to all those staff who assisted us in the performance of the audit." Can you find 3 more major mistakes? The statement "fails to cover" does not reflect the evidence that was obtained. It should be reworded as the opposite, as it does cover all important aspects. "Is guilty of not being equipped" is inappropriate. The word guilty denotes an accusation. It can be revised to "the financial controller is not equipped." The word pitiful is quite emotive and may be reworded as poor. Your final 3 mistakes, please. Problems concerning sneaky behavior sounds unprofessional. It could be rephrased as problems concerning irregularity. The term battle plans sounds confrontational. Action plan is the correct term. Has been agreed with Susan is rather odd. We don't normally name names or just use a first name. It may be best to change this to has been agreed with all relevant parties. How did you get on? I hope you enjoyed our little exercise. There's no one way of preparing your report, and the terminology used by each audit team will have its own report writing style. Having said that, we've come up with what we feel is an improved version that you can quickly have a look at. Before we leave reporting, let me ask you something. What do you see as the most important product of our audit reporting stage? We would argue that it's the management action plan that has been agreed with all relevant parties, as this is about making things better and encouraging a more successful business. That's your case study done. We said risk-based auditing is the cornerstone of your work, and you've had a quick run through each of the 3 main stages. Have a final look at our risk-based auditing model before we have a quick look at some of the other services that fall under the audit banner.
I hope you enjoyed Alice's case study. It's now question time. Assurance and advisory services each have 3 main parties. That is, the auditor, the client, and the board of directors. True or false, or somewhere in between? Like many issues, there may be some debate involved. Assurance services have these 3 parties. On the other hand, it could be argued that the parties involved in advisory services may consist of just the auditor and the manager, that is, the client who commissioned the work. The debate arises when something comes to light during a consulting project that touches on the audit assurances the board rely on. In this case, the board has to be informed, and as such, will become a third party to the engagement. Let's look at Ricardo's next presentation for more information on the difference between these two roles.
Here's my take on the way consulting work can be assessed and prioritized. We've developed a simple model that has a go at a criteria to help focus the audit effort whenever senior managers ask internal audit to help them. Most problems have an underlying cause, which is often linked to business controls in the form of the way policies, procedures, and accepted methodologies are being used in the area in question. Auditors aren't guardians of corporate policies and procedures, but they tend to know how they need to be understood and properly observed across the organisation. Our model suggests problems at work can be linked to at least 3 underlying causes. A lack of controls means there may be a need for some brand new control procedures. Inappropriate controls means they're poorly designed and just don't do the job properly. Or breach of controls, which is about whether what should be sound controls are being bypassed at all. But what are the available pathways when a problem is referred to you by management? We can answer this question by considering the need to install better controls, refine existing ones, and assessing whether the employee code of conduct has been infringed in terms of breaching the set control procedures. After which you can work out what type of engagement you should embark on. There are no real controls in place, so they will have to be designed and installed. They don't work, so need to be improved and refined. Or they are being bypassed, which could be intentional and require some kind of intervention. Starting with, there are no real controls in place, so they'll have to be designed and installed. Auditors can help work teams update their risk reviews and risk mitigations and even their risk registers. It may involve getting these teams to revisit business aims, update their risk assessments, and then develop action plans based on any agreed improvements, normally in the form of new controls and more efficient systems. Where existing controls don't work and they'll have to be improved and refined. Audit can help by doing some research into the area being reviewed to isolate suppositions regarding waste, efficiency, and measuring outcomes that need to be explored and remedied through better integrated control systems. Finally, where controls are being bypassed, some kind of intervention is normally required to investigate the problems, depending on whether this is intentional or not. Where this involves employee fraud or negligence, it can be quite serious and may involve disciplinary action. In terms of staff training, many audit teams also do a great deal to encourage good compliance and agile risk assessments, as well as fraud awareness for employees. Audit often help managers with advice on specific issues, including the need to improve poor controls, poor compliance, and/or a poor underlying risk culture. The idea is that most problems can be traced back to the way risk and the required controls are being managed.
How about that? There's so much more to auditing services, which has a wonderful depth of different types of work and projects and tasks. Just think about your own personal development as you get involved in so many different types of engagements. Each one will be unique, but they will be carried out with reference to the same professional auditing standards and relevant methodologies. This is one way of deciding how best to apply your time to helping your organization, using our risk and controls agenda model.
Exactly, Alice. An audit support is often based around helping to improve the way procedures are being applied, which is why business procedures are coming up next. Auditors often remark on the inadequacies of the procedures used in an area they're reviewing. But what if management asks for help? And how can we help improve them? One approach is to apply the various elements from our model. Where a business task or support activity cannot be left to judgment alone, then procedures should swing into action. For repetitive tasks, standard operating procedures can be used. Poor procedures may mean significant risks aren't being dealt with by an agreed approach to a basic task or routine. Uncertainty represents risks that may undermine the business if left unchecked, which means an ongoing risk assessment process should capture new and emerging risks that can't be ignored, leading to revisions of procedures. In this way, procedures are part of a dynamic process that's regularly updated. Superimposed over the ongoing review process are three important mechanisms where procedures are fine-tuned, communicated and discussed. Staff briefings and meetings, where operational realities can be discussed and work teams can give feedback on what's working and what's not. Staff training workshops can be used for new and existing employees so that they know about any substantial changes, focusing on new screen layouts and protocols with clear explanations that employees can work through. The idea is to get staff to understand the procedures and know when to seek advice from their supervisors. Next comes coaching and mentoring initiatives, where managers and team leaders simply talk to their people on a one-to-one basis about the changing risks in question and help them get to grips with any new and improved work practices. Good procedures should only be referred to infrequently, as the required routines should be built into screen prompts and system access rules. Technical manuals accepted. We come now to the idea of developing short, summary, office documents that we've called desk notes and screenshots, which set out the role of the procedure, the policy framework, with bullet points of key commands and actions, accompanied by relevant screenshots. This is really useful for staff who carry out routine activities on systems that need to be consistent, so external and internal customers experience a consistent quality service, and data is kept secure. Desk-based activity can be recorded in a single-page document that notes the key steps needed to process a transaction or complete an activity. The growth in working from home is aided by short desk notes, which means, hopefully, there's less need to constantly ask supervisors to intervene. Staff performance management schemes can be used to make sure staff are using their procedures properly. Problems can be fed back into the way procedures have been designed and used. An organisation may get into trouble through privacy breaches, complaints and fraud if staff aren't dealing with transactions and inquiries properly. Let's have a closer look at team briefings and meetings for a few minutes. It's possible to get teams together as part of the risk assessment process and encourage them to consider any new threats and opportunities and improving the way risks are being controlled. With a view to making sure procedures are working well, this approach can be driven by active risk registers that are populated by each business team, so reinforcing the link between dealing with risks via good procedures. What about the audit role? Policies guide ideals and procedures put these ideals into action as a way of responding to known risks in many parts of the business, which is why the auditor's obsession with these things is completely understandable. Many a corporate scandal resulted in investigations and reports that suggest the absence of sensible policies and well-written procedures caused the problem in the first place. Audit can encourage these team-based risk assessments through general guidance or even directed facilitation and training. So long as internal audit doesn't assume responsibility for updating procedures, this may be a good use of audit time. Instead of complaining about poor procedures, it may be an idea for audit to inspire managers to improve the way they develop and employ them.
When procedures don't work, something's bound to go wrong. When they work well but are ignored for whatever reason again, something will probably go wrong. When this happens, management may well want to find out why by embarking on some kind of investigation. And it's here that audit can provide a great deal of support and advice, which is why we've included a brief look at internal investigations in your training course.
But before we do this, let me ask you a question. Investigations should focus primarily on what? What happened? Who is accountable? Or which controls failed? Sorry, this is a trick question. It's quite possible that all three things will be considered during an investigation. If pushed, the main thrust may be finding out what happened, but then again, controls and whether they need to be improved may also come into play, while respective accountabilities swing in when it's clear that there's some blame involved. All these things will be touched on in Ricardo's next presentation.
I'll do my best, Diane, using an approach that tries to tackle some of the things that have to be covered during an internal investigation. audit investigations have to be done with skill and care. We touch on one simple approach to this specialist task using our model. There are many parties who want to ensure sensitive problems are properly investigated, including the board, directors, heads of service, human resources, regulators, compliance teams, and many others. Such matters may be referred to internal audit to investigate, and will quickly whiz through each part of our model. In this case, audit will need to do a professional job, whilst not being held responsible for making decisions resulting from the investigation. Someone has to be responsible for the project, and that's the designated sponsor, who will commission the work and make sure it's done in line with the corporate policy. They will sign off the terms of reference and make the resulting executive decisions. If the sponsor doesn't know what they're doing, then you really shouldn't accept the engagement. Professional standards mean you're not allowed to accept an investigation that you're not equipped to complete. It generally means you'll need to isolate the stakeholders and the problem at hand, prepare a plan, do the fieldwork, and then report your results. Before you can get stuck into your investigation, you'll need to carefully define the problem and work out how it should be tackled. Whether this indicates a fraud, a major safety breach, regulatory violations, a quality failure, or just basic unacceptable behaviour. Some issues should be referred to internal or external specialists because they need to be dealt with by technical or legal experts. It's possible to set standards for the way investigations should be conducted. For example, planning. A plan of action will be prepared 1 week after the claim has been received. Performing. We aim to complete the fieldwork within 3 weeks of agreeing the plan, wherever practicable. Presenting. A report should be prepared within 1 week after the fieldwork has been completed. Meanwhile, it's not normally advisable to comment on the matters being investigated. Once the immediate problem has been sorted out, the focus should be to ensure any future problems are tackled through better business controls, since most investigations happen because risks have got out of control. We come now to your plan. Your background work will have isolated the nature of the allegations and the size and sensitivity of the claims in question. The idea is to work out how best to isolate the claims that are being examined, and any resources you'll need. This will all form part of your terms of reference. The initial plan records the TOR and resources and will provide a means of addressing several questions such as: what is the problem? What laws and/or procedures are affected? What information do we have so far? How do we examine this problem? What kind of support do I need? The plan may well include loads of schedules indicating what records, data, systems and reports need to be examined, and the dozens of people who may need to be interviewed. As you work through the agreed plan, the documents and detailed analysis may start to stack up into a confusing maze of potential evidence. Your means of escape from this maze is your fieldwork summary, which makes clear the claims being examined, the evidence that's gathered for each one, and the conclusions that can be safely drawn from your evidence. In other words, your roadmap through the investigation, from planning to performing to reporting the results. Your job is to gather sufficient, reliable, relevant evidence, which means all your various analysis, incident reports and interviews should be included in relevant evidence schedules that each have a clear aim and result. These schedules will then feed into your wider fieldwork summary that aggregates everything you found into a systematic whole that captures the claims, the evidence and the implications. Let's quickly explore this idea of evidence. When you get to substantiating the various claims, it's a good idea to think about the information and explanations you're gathering. In risk-based audits, the evidence has to be good enough to convince the auditor and the client that either no action is required or that decisions are needed to strengthen systems or change behaviours. In criminal prosecutions, the evidence should be slam dunk proved beyond all reasonable doubt. Internal investigations, on the other hand, need enough evidence to prove a claim on the balance of probabilities, which may be heard in a quasi-legal hearing such as an employee disciplinary procedure, a regulator's review, an insurance claim or some form of civil action, in which case it should be reasonably compelling. Your model contains a diary of the investigation. Many investigations are quite sensitive and cause some degree of concern about their true purpose. The diary will record the progress of your investigation, recording analysis and decisions made. It will show efforts to make contact and decisions not to pursue something. The other consideration is a timeline of events, which is a chronological list of the events that occurred. Some investigations are mainly about preparing an account of exactly what happened during an incident. Returning to your fieldwork summary, the work you've done in populating this document will flow directly into your report. Even if your approach is to deliver regular personal briefings to the sponsor, a properly structured document will still have to be prepared and published. As the investigator, you'll want to report several things: why the investigation was carried out, the adopted terms of reference, any special factors involved, background to the claims and people involved, the methodology for performing the work, the evidence that was obtained and how it was evaluated, the actual findings in terms of what you believed happened and why, including the sequence of events, and finally the recommended next steps and ways forward. We come now to the business decisions box. That is, management will have to make two decisions: how to ensure the problem doesn't occur again, and dealing with anyone implicated in the investigation. The controls only work when someone is responsible for managing the risks they guard against. But if there's a blame culture, then people may fear being a scapegoat. Where something goes wrong, it's generally much better to work out if there is a training need or evaluate where procedures failed. Although intentional flouting of rules is different, as is gross neglect in the performance of one's duties, in which case formal sanctions should swing into action. We've included quality assurance in our model, since this aims to ensure investigations achieve an acceptable level of professionalism, by reference to things such as there should be in place a set of standards and supporting guidance. All those who have a key role should receive appropriate training. The sponsor should review the work carried out. Meanwhile, a senior auditor should coordinate and review the investigation. We have in our model the words dishonest, uncaring or incompetent, since if problems aren't fully investigated, it may mean senior management dishonestly condones the actions or failure to act that led to the problem in the first place, doesn't really care enough about the matter in question to make sure it is fully concluded, or is so incompetent that they don't realise there's a problem that has been neglected. The bottom line is to avoid this claim by ensuring a professional and objective approach to conducting internal investigations that ensures several things: the fair treatment of all parties to the investigation, that the investigation is conducted by someone who is both impartial and professional. All parties have a chance to put their case forward and respond to all evidence that affects them. There is a right to appeal against any ruling that adversely impacts any party to the investigation. By their very nature, internal investigations can affect someone's career, which means taking great care when doing them.
We've looked at risk-based assurance audits, and we've considered this idea of audit services that cover loads of different types of projects. One thing we need to address is helping management deal with the need to be agile and resilient. Waste is the enemy of business and also undermines the public sector, where taxpayers' money isn't being used properly. Which leads us into the topic of value for money and how audit can help here. Hold on tight for a short presentation on this topic.
Which is why we've included value for money in the category of other audit services. VFM is about having the right controls in place to ensure waste, losses, and poor performance is kept at bay as far as possible. Let's have a quick look at this idea of value for money. Value for money is about achieving economy. Resources required to perform the operation are acquired in a cost-effective manner, with a focus on key suppliers and contracts along with the business partners and associates engaged. Efficiency. Resources are employed to maximise the resulting level of output. The main focus here will be on the business process and digital platform employed by the organisation. Efficiency includes a consideration of both the input cost and quality and business processes. Effectiveness. The final outputs represent the products and services that the operation was set up to deliver. This can be to external clients or for business units within the organisation. This is essentially about optimising how we're resourced, how we work, and what we're able to deliver to the marketplace. We can add one further criteria, that of resilience, since this is the key word for organisations working in fast-paced environments that are the feature of today's business context, which means systems and processes will have to be quickly modified in response to the moving risk landscape. We can add the concept of outcomes to our model, as this takes us further from mere outputs. Getting to the best results means more than simply producing a set of goods and services. Auditors tend not to question the validity of the objectives or associated policy framework, as we're more concerned with the extent to which they are supported by suitable managerial mechanisms and practices. One driver for VFM work may be cuts in revenue budgets marked as cost savings that are needed to support the current corporate strategy. These savings are the responsibility of management and not the CAE. Let's have a quick look at audit reviews of operational efficiencies. A risk-based systems approach to an efficiency review would consider the standards, plans, direction, and type of information that management needs to control operations. It may involve reviewing best practice in terms of alternative operational practices, or by isolating specific instances of waste and inefficiency that may be corrected. Audit work may consider whether operational objectives are being achieved by defining the end product, examining the current output, determining whether this output is acceptable, and quantifying any shortfalls. This may be based around customers' perceptions as recipients of the relevant products and services. Before we close, it's possible to set out a basic checklist for carrying out value for money reviews, along with investigations into specific claims of poor VFM. Part of the scope of internal audit involves evaluating the adequacy and effectiveness of arrangements for securing good value for money. These arrangements consist of controls established by management to ensure that their objectives will be met based on promoting the best use of corporate resources. Based around ensuring inputs are carefully processed into defined outputs, management teams should engage in a continual search for efficiencies that may result in a level of savings and better outcomes. It's not internal audit's responsibilities to identify these savings. An audit's own performance measures shouldn't include the amount of money saved through implementing audit recommendations. We'd expect audit recommendations to place management in a better position to be able to identify areas where they can make savings and implement improvements. But this is not the primary role of the audit. Our duty is to advise management on securing better risk management, which includes dealing with the risk of inefficiencies and failures. It's possible to embark on major VFM reviews as part of the audit consultancy services for management, which is particularly relevant for public sector services.
There you go, getting inside operations to help work out what's going wrong and how systems can be sharpened. But that's not all that audit has to offer. There's so much more. Your next presentation has a look at an important topic, which Diane will test you on.
No problem at all, Alice. There's one specialist topic that auditors may come across that has to be treated with great care, as it could lead to the involvement of the authorities who investigate deceit. What do you think it is? Fraud is one of those risks that's always high up on the boardroom agenda that needs to be properly addressed. This is a specialist topic that's not really suited to our introductory course, but we've nonetheless included a brief overview of one interesting aspect called the fraud triangle, which Ricardo will now cover.
Absolutely. As Diane has said, we only have time to deal with one aspect of fraud risk management, in this case the fraud triangle. Fraud is a huge topic, and there's so much that can be said about this major risk. We're only going to sweep through one model, a really useful tool called the fraud triangle. A standard on why people commit fraud was set by Donald Cressy, who used 3 key features to explain why fraud happens. 1. There must be an opportunity to commit fraud. External fraud consists of attacks on the organisation from outsiders, while internal fraud involves employees. 2. A real financial need that cannot be met from elsewhere, or shared with anyone who could help out. 3. Rationalisation means the person doing wrong can feel justified in some way, or they just wouldn't do it. Let's analyse the first factor. Opportunity. Fraudsters are able to commit crime because they have an opportunity to do so. We've added 3 more sub-factors. The fraudster also needs to have the skill and capability to get around the system and commit the scam, which is why long-term trusted employees are often in a position to abuse this trust. Opportunity is mainly about loopholes in the system of controls that should be in place to guard against fraud. Clever frauds tend to be hidden from view and concealed so that they remain undetected for some time. For example, forged write-offs are one way of covering up funds that have been illegally removed. There are 3 more factors for the next part of the triangle that considers this idea of a financial problem that cannot be shared. Some people are driven to fraud because of forces they can't share with others, who may have been able to offer an alternative. These forces are so strong they supersede society's view that people should be honest. They tend to be summed up as personal need or greed. We've added a 3rd factor as helping out others in need. Someone who has a gambling addiction may well be tempted to steal from their employer as they struggle to find the cash to feed their out-of-control addiction. The final part of the triangle is this real scary idea of rationalisation. This is where otherwise honest people are able to convince themselves that what they're doing is excusable. We've developed 3 further components to support this factor. As well as following the crowd and getting due payback, our 3rd one is simply acting in an irrational way. Irrational behaviour is where the justification in question doesn't really make much sense to anyone other than the perpetrator. Let's dig a little deeper into this idea of rationalisation, which means an illegal act can be made to appear legitimate in someone's mind. A dangerous threat is when normally good people go bad, but feel they're justified. They rationalize their actions in their own mind because of many reasons that make sense and seems fair to them, some of which are noted here. Remember, the more trusted a person, the more responsibility they tend to be given at work, and hence, the more damage they can do. And the more senior they are, the more authorizations they have for high-value transactions and assets. Let's recap the fraud triangle and the 9 relevant underlying factors. It's possible to use this model to help improve fraud awareness from staff within an organization. The best awareness tools focus on the corporate fraud policy, with the aim of ensuring all staff understand it and apply it to their work, including the red flags alerts and whistleblowing policy and hotline. The fraud triangle can be used to introduce the concept of fraud and some of its driving forces. The bad news is that if the 3 fraud drivers of our fraud triangle are in place, there's a strong likelihood of fraud materializing at work. The good news is that the triangle can be used to help fight fraud. Perceived opportunities can be tackled by ensuring sound controls are designed and regularly reviewed and updated. Financial need drives fraud, and a policy of offering confidential support and advice may provide alternatives for otherwise honest people who feel desperate. While the deadly force of rationalization is hard to address, but by being a fair and trusted employer, there's more chance an employee will feel committed to the general ethos of the corporate code of conduct. Superimposed over these countermeasures is a zero-tolerance policy that may also be put in place, based around the view that committing fraud is wrong and will be found out and punished. Maybe even behind prison bars, there's simply no excuse. You can think about using the fraud triangle when considering fraud by assessing whether management has considered the ideas that can be drawn from it as a way of promoting good fraud risk management. The fraud triangle explains why fraud happens, but it doesn't excuse it. There's simply no excuse for using deceit to break the rules for personal gain.
Well done. You've covered a great deal of very basic material without delving into the detailed world of the Institute of Internal Auditors Global Auditing Standards, which is something you'll need to master in your own time. We've just got a little more work to do before you complete your training course, and that involves a topic that should be close to an auditor's heart: change management.
Thanks, Alice. Some argue that auditors may need to act as a change agent, which is why we need to have a quick look at this topic in what is actually my final task. Let's run through a simple model for making changes at work. When you consider the tremendous challenges from business transformation driven by advances in digital innovations, there's much that can go wrong. Organizations have to bend and sway in what feels like frequent storms along with the occasional hurricane. Internal audit will be part of the constant drive to improving the business as they carry out reviews and issue their recommended actions, which can lead to changes that teams may be reluctant to grasp as they simply add to the stress and tensions busy managers have to contend with. For more significant audit projects, it may be an idea to think about using a sensible change strategy by understanding the emotional stages that may arise when implementing proposed changes, which our model has a go at, starting with confusion as to whether any major changes which threaten jobs, positions and perks. It's important to move through this stage quickly, since uncertainty can lead to a stressful feeling of not being in control. Next is reluctance, which can be a sticky emotional stage where people work out if they should support the required changes or not, and even start looking for new employment, or even worse, try to sabotage the new arrangements. We come now to the exploration stage where people start to check out the pros and cons and exact implications of what's being planned. Much depends on the quality of information that's available and whether there is a vacuum that means office gossip and rumours swing into play. Much progress can be made when people start accepting the changes and realise that it's pretty much inevitable. But is this enough? Not really. Beyond acceptance comes commitment. New working arrangements need to bed down so that teething problems can be sorted out by staff, who are energised to look for solutions rather than simply blaming the change programme. We suggest several strategies to get through each of our stages as quickly as possible. It's important that the need for change has been explained and understood by providing clear information on the proposed new processes and procedures. Where the anticipated level of resistance is high, management may need to remove barriers by adopting a more rigid approach as a shortcut to getting the required changes quickly implemented. It's also possible to remove barriers by engaging team leaders and getting respected staffers to explain the benefits. While some argue it's about unfreezing old attitudes so they're more aligned to the new requirements than freezing these new behaviours. Good project management means realistic expectations and deadlines that allows a degree of experimentation and possible failure as part of the learning process. Suitable training programs attached to the required changes and new skills that have been identified are always important. Done well, this can be used to generate ideas to help embed or even improve the changes. Although there's a view that performance will decline shortly after new changes are introduced as a result of unforeseeable risks, which then improves with quick wins and the development of improved risk-based new procedures. Using this approach can help the auditor become a dynamic change agent who not only issues reports, but can also help advise managers on the best way to implement these changes.
Your role may well be driven by the need to make changes at work, to support positive change, to advise on whether new systems are working, and to recommend changes to working practices where required to improve governance, risk management, and the way crucial controls are working. Wow, you've done it. You've covered your intro to internal auditing. As with the other parts 1 and 2, you need to have a go at a few short questions before we close. And here they are. Background work involves doing what we can call a preliminary survey, which accumulates relevant information regarding the areas to be reviewed. So a defined direction for the ensuing audit, if it goes ahead, may be agreed. Some call this a scoping exercise, which can be used to firm up the terms of reference. The fieldwork summary is the central document that can be used to capture your entire audit. You can start building it at the planning stage, then the ascertainment, evaluation, and testing stages. You can then use the summary to drive your draft report's findings and recommendations. In criminal prosecutions, the evidence should be slam dunk proved beyond all reasonable doubt, while non-fraud internal investigations, on the other hand, only need enough evidence to prove a claim on the balance of probabilities, which may be heard in a quasi-legal hearing such as an employee disciplinary procedure, a regulator's review, an insurance claim, or some form of civil action, in which case it should be reasonably compelling. The final part of the triangle is this real scary idea of rationalization. This is where otherwise honest people are able to convince themselves that what they're doing is excusable. We've developed 3 further components to support this factor. As well as following the crowd and getting due payback, our third one is simply acting in an irrational way. Irrational behavior is where the justification in question doesn't really make much sense to anyone other than the perpetrator. We've covered quite a lot in this part of your course, and now it's time to stand back, slow things down, and hear a few closing words from Kenneth.
Thanks, Alice. We've covered quite a lot in this introduction to internal auditing. The brave new world where business transformation, driven by AI and disruptive forces, can make any slight hesitation potentially deadly. Which means organizations may be forced into making decisions very quickly and approve projects that need to come online not in years, but in months. These rapid decisions can become a crucial part of the transformative change process that can make the difference between survival and disaster. Against this background, you should remember that auditors aren't regulators and we aren't inspectors. We're not the steering wheel, nor the brakes, and we're not even the accelerator. We neither try to slow things down nor make them go faster. In my mind, You are someone who helps the organization continue their journey by ensuring they're able to stay in control. Which means having the right vehicles with the right controls that are used in the right way, on the right road, at the right speed and direction. I guess what I'm saying is that we should look at an organization as an entire system of controls that has to be properly governed. And the way it operates and any changes that are planned have to make sense. If not, the internal auditor may well be the person who is prepared to point the finger where this system is in danger of spiraling out of control, while at the same time offering important suggestions to help improve things. In fact, I'm old-fashioned, and I see everything that goes on in an organization and everything that's in your model as together forming the system of internal control, which is what you, as the auditor, will review, assess, and examine, and then report on. And please don't worry, let me reassure you, you won't be replaced by AI. If your role is to assess whether AI is being used properly to enhance the viability of key corporate systems and the way they work. Auditing isn't about analyzing vast amounts of data, looking for error, waste, and fraud. It's about asking whether management are doing this themselves by exploiting suitable AI tools. Although audit may well do some of their own analysis to find out whether management have control over error, waste, and fraud. Which means, as the internal auditor, you should always stand tall, looking down on the systems of risk management and control to assess whether or not they're being properly governed.
Here's a reminder of what we tried to achieve in your introductory course, which is to get you to understand the basics of internal auditing, that is, the audit concept, the underpinning procedures that should drive the audit team. And finally, we hope that you're able to help conduct auditing work so you can contribute to the delivery of professional auditing services. That's all, folks. You've stuck with us and completed the basics. Your final Part 4 consists of additional resources consisting of a crossword and some extra models that each have their own narrative, which you might like to dip in and out of, or simply listen to. It's a goodbye from our small team of trainers and good luck as you embark on what should be an exciting and most rewarding new career as a professional internal auditor. You may want to take a break before you look at your Part 4 resources.